Good morning, ladies and gentlemen, and welcome to today's session. Today, we are going to tell you a little bit more about group audits and specifically how we are going to implement the new standard on group audits in Probe Audit. So I see there's a lot of you, and I'm super excited with everybody that's been able to join us this morning. But if by any chance you are here and you don't audit on Probe, you actually audit on Audit International, well, you are most welcome to stay on. We're going to have a quick look at the standard itself, and you might still learn something. But today we are going to focus on the Probe Audit Methodology. Right. So as always, let's get some of the administration out of the way. All attendees have been muted. That's really just to make sure that nobody accidentally unmutes themselves. You are, however, most welcome to, and I want to encourage you to use the chat or question function. There's a questions block where you can add some questions, and those will go through to the organizers. So Christian Stein is also online with me, and he will be responding to some of those questions as and when they come up. And then, of course, if it is something that could definitely benefit all of us, or where I can actually maybe rather expand on it a little bit, you will highlight them for me to also discuss in the webinar. So please, you don't have to wait for the end. You are welcome to send those questions as they come up for you. All right, so use the question function. Then if your signal is lost, you can exit the webinar and just join again. And then just a note on the side, practically we found that when people use the app on the computers, it tends to be a little bit more stable than the web-based version. So if you do see that you are on the web, I haven't actually had a look at the delegates, but normally there are a few people who join via the web. And if you then find that your connection is not very stable, it might be better or easier to just join using the app. All right, and then as always, the session is being recorded and we will make that available to you afterwards. I will also share some notes with you, and you will see that I've got a few links to documents on our support site as well, the Success Community, and we will also share those links with you after the session. So you will get lots of guidance and assistance afterwards, so you can look out for that. And of course, that also means that if you're not able to join us for this very long session today, then that's also fine, because you can then actually just watch the rest of the session that you do end up missing if that happens afterwards on the recording. And those are also, of course, loaded to YouTube, so you're also able to just go to our YouTube channel at Caseware Africa to go and have a look at that there. Right, and then just to start off to say, remember that our audit, oh, hang on, sorry, I just, here. Our audit methodology, let me go back to the slide. Our audit methodology is, of course, within our assurance group. And so today we are looking purely at an auditing standard, ISO 600 revised, the one about group audits. All right, so that's just there in our in our product range. Right, so myself today, many of you may know me already. If you don't know me, my name is Johanna Schreder. I am the content provider for some of the products in the assurance suite, and then I also do training for Caseware Africa. So I must admit that this fantastic tool that you're going to look at today is definitely not due to me. I can't even say due to me only, because I just did some of the reviewing and did some of the testing on the software, but there was a whole team, content provider, and of course the developers who were involved in this. So that really is, today is just the culmination of all of their hours and hours of hard work. And I'm extremely excited. I really think that they've achieved a fantastic tool for us. So yeah, that's just, I'll be the one talking today, but of course there's a whole team behind that. All right, then the agenda for today, we are going to start looking at just an introduction to ISO 600. Now, I want to say at this stage already that the intention for today is not to go through the whole auditing standard. So yes, because the understanding of some of the principles in the standard is critical for you to be able to see why we did certain things in the product and why certain questions come up or how things are done, we did feel that it's necessary to just highlight a few points from the auditing standard. But the point is definitely not today to go through a whole auditing standard lecture today. So we're going to give a quick introduction to the auditing standard. We're going to discuss some important terms and concepts of ISO 600, and then we're moving closer to the audit methodology, saying that we're then going to focus on some important concepts in the audit premium template, or in the audit premium methodology based on ISO 600 revised. And then, of course, then we're getting stuck into the product and spending the majority of our time then on the audit process itself, specifically how the requirements are then implemented and linked into the Probe Audit Premium audit methodology. All right, we will take a comfort break at 10 o'clock, and I will definitely be looking out for 10 o'clock, so please don't think that you're going to sit here all the way till 12 o'clock. We will take a quick comfort break at 12 o'clock, get a cup of coffee, maybe something to chew on while you are listening to me and seeing all these big changes, and then we will continue until 12 o'clock. All right, so the intention is definitely not to keep you here for the whole day, but it is a long session, and with good reason. It's quite a full session as well. Good, so let's get started then with an introduction to ISO 600. All right, I'm going to now hide my webcam, or switch off my webcam. You have seen me, so you definitely know it's not just an AI voice. I am here alive and well in Cape Town, sunny Cape Town. I saw some names from other people also in Cape Town, so yes, that's where I am. But I am just going to hide my webcam now so that you can just focus on the slides. Right, so an introduction then to ISO 600 revised. Now the standard deals with special considerations, and very specifically then special considerations for group audits, where, and especially then also when component auditors are involved. Now, one of the reasons, or a few of the reasons why the standard was revised was, well, firstly, to add additional requirements and to revise some of the requirements to make it more in line with what we are doing today, with how audits are being done today. Additional application material to explain where things are changed, and then very specifically for some changes in recent years, ISO 200, ISO 315, I think that might be actually a typo, it's ISO 220, engagement, quality control, of course, ISO 220, and ISO 315 revised 2019. You'll remember in 2022 we did a similar training session on how the audit methodology changed for the risk assessment, ISO 315. So those changes have now been incorporated into the group audit standard. All right, important to note there is that the effective date for the audit of group financial statements is already for the financial periods beginning on or after 15 December 2023. And that is correct. So what does that mean? It means that if you have a full financial year, 12 months, your client's first year ends where you need to apply this revised auditing standard is already now December 2024. And that's also why the standards will, not the standards, the template and the updated methodology was already released in July, end of July, early August. We had a little What's New webinar there, and then of course we're doing today's session. So some of you may already have been using the methodology and the template with the reference to the What's New material, and then of course we issued an updated template version 2023, so the second release for this year with some additional user interface changes, and I'll highlight some of those as well because they are quite beneficial as we go through them. All right, so that's just important to know that this is not only for next year or June year ends or anything like that. That's actually already for your December year ends where you are auditing groups this year. Good. Then in terms of the objective of the standard, I'm just going to highlight a few points here just so that we can know why the standard is there. First of all, to ensure that the acceptance and continuance of the group engagement is actually performed, and in the acceptance and continuance considerations, we actually then already determine if sufficient appropriate audit evidence can reasonably be expected to obtain. And not just for the individual audit opinions, but of course for the group financial statements, the audit opinion on the group financial statements. Then also to identify and assess the risk of material misstatement of the group financial statements and to plan and perform further audit procedures. Now this sounds I almost want to say, like, obviously, of course, we know this, but it's actually important because there's quite a big change in the focus of the standard in saying that we are making audits of groups' financial statements more risk focused. So we no longer just worried about, and I've got slides later on as well, about significant components, for example. We are actually doing a risk-based audit on the group financials now. Then also the group auditor has to be sufficiently and appropriately involved in the work of the component auditors throughout the group audit. So it's no longer just sitting and waiting for the pack to be received at the end of the day or the end of the audit period, but to actually be involved and communicating with the component auditor, including things like the scope and the timing of their work. Of course, also evaluating the results, but I want to actually use the word being more proactively involved, but also more continuously. And then, of course, lastly, to evaluate whether sufficient appropriate audit evidence was actually then obtained at the end of the day, including, again, the work performed by the component auditors. So there's a lot more responsibility, or shall we say a lot more focus on the responsibility of the group auditor. All right, then just some key changes from the previous standard. First of all, the definition of what a group is. So a group is defined as being a reporting entity for which group financial statements are prepared. So that's one entity, but it does then also say that these groups can be organized by different ways. Legal entities, it could be geographically organized, it could be different economic units, different functions, different business activities. It could be different entities or business units is basically what the standard then continues with. So all of these things, legal entities, geographical, economic units, etc., is then basically summarized in the term, if you want to say, entities or business units. So if you see us referring to entities or business units, or you see the standard refers to entities or business units, that is everything that's included in there. Then to say that this is a group that comprises entities or business units. Then the group financial statements are the financial statements that include information of more than one, and here we've got our first entity or business unit, and that is then compiled through a consolidation process. Now, what does the consolidation process involve? Well, it obviously involves consolidation, proportionate consolidation, and so forth. It also involves the presentation of combined financial information, of financial statements of the financial information of the entities or business units that have no parent but are under common control or common management. And then lastly, where we don't necessarily have different legal entities but different business units, possibly things like branches, where the aggregation of the financial information of the different entities or business units are done, such as, for example, the branches or divisions. So there's a consolidation process through which we aggregate all the information that is kept separately in the different business units, or if we can say branches there. All right, so that are some I was going to say key terms, but also key changes from the previous standard. I've mentioned that the standard takes a risk-based approach, and so therefore no longer just auditing the so-called big components or significant components, but actually assessing the risk of material misstatement in the group financial statements. And so actually then taking kind of a top-down approach, saying what happens if I look at the group financial statements, where do I see the possible risks? And then for that not little necessarily, but for that individual class of transaction or account balance or disclosure, then I will then go and drill down, disaggregate the information until I get to the parts that I need to audit. So not just auditing all the individual components and then basically just grouping them all together and putting it into the consolidation to see what is the end result of the group financials, but actually going from the financial statements of the group, the consolidated financial statements, and then drilling down into what is making up those classes of transactions, account balances, or then, of course, even the disclosures. Then the role of the component auditors. There's a lot of emphasis on the fact that the component auditor can and possibly should be involved in all phases of the audit. So not just saying, okay, we've looked at this and you must go and audit the trade receivables and check for payments received of the year end or whatever the case may be, but actually saying, let's involve the component auditor to help us also to do risk assessment procedures. So obtaining understanding of how the account actually came about. So your system description, your walkthroughs, things like that perhaps. And then the standard also says that the group auditor remains responsible for the group audit and the opinion based on the group financial statements. So the group auditor, yes, of course, ultimately issues those group instructions, and the component auditor reports back to the group auditor on those instructions and what was asked and what was instructed. But then also the component auditor, must also apply the common sense and say, well, I might also need to do a separate audit on that entity, so possibly doing a statutory audit. And then I'm again running ahead of myself. I'll show that to you again where we are showing it later on. But for now, also just note that the component auditor cannot just say, oh, you know what, I've been doing this little audit on the company itself, the entity, the legal entity, that's this division or the subsidiary or whatever it is. I've been doing the audit on that entity, and I've come across additional information. But you know what, the group auditor didn't ask for that, so I'm not going to report it to them. No. The component auditor must also consider if other information that they learn and that they are made aware of, whether that information is relevant or significant to the group auditor, and then actually report that to him or her or to the group auditor as well. All right, so the role of the component auditor is really part of the engagement team. You're no longer just your few, almost want to say teammates, your one audit manager, one partner, 5 trainees in your office, but actually a much bigger group of engagement team members. And that's also then part of ISO 220 then actually that says, well, the component auditor is now also part of your engagement team. So even when you then consider things like engagement resources, you name it, you don't, not just considering that for your own team in your own office, but for all component auditors. Right, then if we go and we have a look at the documentation requirements. So I've jotted down all the documentation requirements, but there is a lot of emphasis here on the basis for the determination of the components, for example, for planning and performing the audit. The significant matters, I'm sure no one's surprised by that, all significant matters, but then specifically related to restrictions on access to people, restrictions on access to information, and then how did the group auditor address those restrictions? Hopefully there is a situation that's easier to address. Let's say, for example, the component management is not available, but you can actually get that information from the group management. So yes, you might have restrictions on access to the person there at the component, but the group management is able to actually help you. So how did you address that restriction? Well, you refer to the group management. All right, the basis for determining the component performance materiality and the threshold above which above misstatements should be communicated. And so that's also there. How do you determine that component performance materiality? And then the basis for determining the component auditors have the appropriate competence and capabilities. That, of course, is something that we mentioned just now, to say they are part of your engagement team, so you've got to make sure that they have the appropriate competence and capabilities. Continuing with that, in terms of the documentation, key elements of your understanding of the group's system of internal control, the nature, timing, and extent of the group auditor's direction and supervision of component auditors. So how did you go about directing them, as well as what you reviewed, the nature, timing, and extent of the review of their work. And then, of course, if you need additional component audit documentation, that also. Communication with component auditors, as we mentioned earlier, so you need that in documentation, and the group auditor's evaluation, as well as the response to findings or conclusions of the component auditors about matters which could have a material effect on the financial statement. So yes, the component auditor is part of your team. Yes, you need to have communication or documentation of your communication and of the information shared between yourselves in both directions. Right, further then, the need for robust communication and interactions, and that then being with the component auditor as well as the group management, etc. Professional skepticism has a whole little bit there, but to a large degree, it's really to say you still have to apply your your guidance from the other auditing standards in terms of how to apply professional skepticism, how to show that you've applied your professional skepticism through your documentation. But there's some additional guidance saying that remember that if you have a group with different jurisdictions where they are operating, you might have group auditors or component auditors rather, who actually work and live in those different areas. And something like cultural differences and cultural influences could actually have an impact on what would be considered, let's say, significant transactions outside the normal course of business, or what could be considered appropriate actions by management or not. So a variety of things that could actually be influenced by cultural differences. So just being aware of that. And then, of course, complex group structures, just the fact that we are working with groups can really make it complex. And if we then also throw some time deadlines into the mix, that can obviously get quite tricky. And one needs to always remain alert to any contrasting or contradicting information there. Scalability, the standard's really been written to ensure that if you have a bigger, more complex group, you can apply the standard. And if you have a simpler group, you can even apply the standard in that case and make it easy, simple at least, never easy. So if you have a group, for example, where you don't involve other component auditors, maybe we've got a group and we actually audit all of those components within our own firm. In other words, we don't have any component auditors that are outside of our firm that use a different system of quality management or has a different methodology or anything like that. You can imagine the nature, timing, and extent of your group instructions is going to be quite different between having a partner in your office being a component auditor versus having a partner that's in a different office of a different network of a different firm. Note that I do refer to this other partner that is also involved in parts of the business of components or other entities or business units. I refer to that engagement partner as a component auditor. And we will just unpack that a little bit as well. But for the time being, I think it's good enough to say that basically you'll have your group auditor, who's the engagement partner signing off the group opinion, and then you have the other component auditors who are doing work on the components. All right, so that's just an introduction, but we're going to get to some of those terms just now. All right, so that being the introduction to the auditing standard, and then moving on to important terms and concepts in ISO 600. Remember, the purpose for today is for us to tell you more about the methodology itself. Of course, it's exciting because we've never before had the group audit methodology or the methodology addressing the group auditing standards. So it's important that we just focus on a few specific important terms and concepts before we jump into the audit methodology itself. All right, so the group financial statements, and we're going to unpack it a little bit later on, is a separate set of financial statements with a separate audit opinion. I'm going to say that again. So the group financial statements is a separate set of financial statements with a separate audit opinion. So even if you are perhaps your client drafted their financial statements with 4 columns, so 2 columns being the parent company and 2 columns being the group financial statements, you still have 2 sets of audit financials, and in your audit report you will have 2 audit opinions. So it's quite important for us to just bear that in mind. So I might need to, I always want to say, change hats. So remember, when am I busy with work as the auditor of the group company? And when am I busy with work, or the parent company then if we want, and when am I busy with audit work of the group, the consolidated group, the group of entities? All right, so that's just already something to bear in mind. The components, I've mentioned this before, that the component is no longer just a significant component. We consider basically all components because we are following that top-down approach in terms of the financial statements. Where can things go wrong in the financial statements, and then go and see where we go. Now, the component auditors, that is determined or defined as the auditor who performs audit work related to a component for the purposes of the group audit. So you can see why I then said that a partner in your firm that does audit work only on a component is actually also a component auditor. All right, now the component auditors, mentioned again already, part of the engagement team for the group audit, and so our quality management policies and procedures need to actually apply to those individuals as well. The component auditor communicates the information to the group auditor, and I had also earlier already then mentioned to say that also need to consider whether additional information needs to be communicated to the group auditor if it is believed to affect the group audit and the conclusion even on that. Right, so just a few terms there. Then if we move to a few important concepts. So these concepts are almost things that we had to think about. How are we going to implement this in the probe audit methodology? Now, granted, it could be that if you had thought of this yourself and you developed your own methodology separately, you might have wanted to do this differently. It's also possible that another methodology might have come up with it differently, but this is the way that we've set a principle basically in the probe methodology. And so if we suggest things, if we explain things, it will be based on those principles that we include in this section. All right. So the first concept is basically one opinion is one file. So for every audit opinion that will be signed, there will be a separate engagement file, audit engagement file. So let's see what I mean when I say that. Let's look at an example. All right, so the first example is where I have a client structure, scenario 1. Scenario 1 has client holdco, which is a company, Pty Limited, as my parent company, holding company. And then I have 3 entities that are held as subsidiaries by client holdco. Sub A, also a company, sub B is a company, sub C is a company. So we've got 4 entities involved in here, 1 group. All right, that's scenario 1. Keep that in mind, and then we have a look at scenario 2. Scenario 2 is where I have a company, in this case, company ABC, Pty Limited, so company, with 2 divisions. So the company's results are ultimately made up of the 2 divisions, and we keep this information separately. We can even call them branches, possibly, divisions, branches, where they operate independently, separately from each other. And then in order to compile the financial statements for the company, there is a process of consolidation. Remember that definition we had earlier on? There's a process of consolidation whereby the company's financial statements is prepared through the consolidation. So as the auditors, we need to audit that consolidation. And so that makes this one a group audit. It's not necessarily something you would have thought of yourself, or even possibly not necessarily a way in which we would have identified some of the groups in the past under the previous standard. So it is a bit of a different one, but we are also providing for that scenario. So now let's go and have a look at the one opinion, one file concept. Right, so the question is, how many audit opinions do we have? In scenario 1, where I've got client holdco with 3 subsidiaries, we definitely have an audit of client holdco of the company itself. Then we have the group financial statements, the group, client holdco with a consolidation of sub A, B, and C. And then depending on what is involved in subsidiary A, B, and C, being companies, whether they need an audit for statutory audit, for example, maybe they've got independent reviews or whatever the case may be. I definitely have 2 audit opinions for the group company, the consolidated company, and then for client holdco, and then possibly a further 3. So maximum, I guess, there could be like 5 audit opinions here. Obviously, this is almost want to say a simple group, right? You can obviously have subs of subs and all kinds of other complex structures, but just keeping this simple. And then for scenario 2, where we've got the company with 2 divisions or 2 branches, if you wanted to, those 2 divisions are not corporate entities. So they don't necessarily need separate financials. They don't necessarily need separate audits. Of course, It's quite possible they can have an audit, right? So I'm not saying they will never have an audit, but in all likelihood, it's possible that you're going to mostly have one set of financial statements, one opinion, being the financials of the company. Yes, the information was consolidated between the two divisions or the two branches, but ultimately the financial statements for company ABC. So possibly not necessarily a consolidation in terms of your financial reporting framework, but the ISA 600 concepts have to be applied in the audit opinion, and so therefore in the audit. But it's one audit opinion on the set of financials. You're not reporting on the group ABC. So there's one opinion, one audit file. Yet we are saying there is a group, right? So let's kind of have a look then at how we are addressing that in the methodology. In 1020, your engagement evaluation document, we have added not just one new engagement type. So you'll know we currently have audit and review. So we then said, right, let's call it old audit. Let's call that audit single. So just a normal audit, if I can say, audit single. And then we added the group audits, two types of group audits. Group audit for a single legal entity with multiple business units. So that's actually scenario 2. And then group audit multiple entities. So you can now say group audit multiple, group audit single, or audit group single, audit group multiple. As long as you remember that the moment it says group, it means ISA 600 is applied. So you can then have anything up to 4 different types of engagements. So let me quickly actually just show you that in the product, because I'm feeling like I'm maybe just talking in the air and not necessarily giving you any link to the product there. Okay, I just want to give you an opportunity for it to synchronize. Looks like it's mostly been synchronized. So we have then right at the top, audit single legal entity. That's your, if I can call it that now, the old or the traditional audits that we have always had. That just now has a slight change in name. The review being your independent review, of course. Your group audit, single legal entity with multiple business units. And your group audit, multiple entities. Right, so those are your 4 options. What I've done for the purpose of our demonstration in the engagement file today, I've selected group audit multiple entities, just because there are a few, it feels to me like there's a few more ways in which that one can possibly change. So I've preferred to then rather just show you that one. All right. I see now that the question, there was a question earlier that says for the first scenario, so let me just show you the slides again. For the first scenario, just waiting for it to synchronize. Yes, so for the first scenario, we had the audit opinions then for, sorry, let me get my laser pointer, for the client holdco, individual entity, sub A, sub B, and sub C, if they are all 3 entities and all 3 of them are audited. And then the whole group then also being a 5th audit opinion. And that's then the, if I can call it the ISA 600, the group audit opinion. So you'll have 5 separate files, 1 file for subsidiary C, not necessarily your firm. If it is a component auditor that audits them, they'll have that file. Subsidiary B will have a separate audit file. Subsidiary A will have a separate audit file. The client holdco, the Pty Limited, the separate company, will have a separate file, and then the group will have a separate file. Now, it might be strange to you to say, but why do we not just have 1 file for client holdco and the group? And there's a few considerations there. The first one is, practically speaking, the caseware file has 1.10.20. So to consider the ethical requirements or anything like that, the discussions with those charged with governance, each and every one of those documents in the methodology, there's only 1 of them. And so to make it simple from that perspective, it's just easier to have 2 separate files. But more than that, it was important to ensure that the auditor will always remember which hat they are wearing. What am I doing now? I am now in my audit file for the audit of this company, client holdco, and therefore, when I answer these questions, I'm only considering the separate company. When I move to my group file, and now I'm going to move my little pointer right to the top because I can't carry on making circles. It'll probably get you a little bit drunk this early in the morning. So the group audit opinion, I have a separate caseware file for that with my separate documentation. Yes, all the other documents as we have, but there I will remember that I now wear my hat as group auditor, and I document my considerations as group auditor for the group. All right, so that's essentially the take that we had on that and the way that we are addressing it in the product. All right, now let me just get back to where we are. Then that was then the considerations of the group audit and the two new types of engagements. The component auditors, what will they do? So they will have an own file for the audit of the single entity, as we've mentioned now, for subsidiary A, subsidiary B, etc. Now, there may be an implication, or there will be an implication, where you have a firm that is both the group auditor and the component auditor. And there are, practically speaking, there are options. We would suggest the best practice would be to still continue to have your separate files. So one for sub A, one for sub B, one for sub C, one for the company, and one for the group. You will, however, need to consider what your quality management policies and procedures say. So, for example, if you have a component auditor outside of your firm and they have their separate file there, are you going to actually get a copy of that? Or a copy of all the working papers to also include all the component working papers into your group file so that you've got one file with everything in there? Or how are you going to treat that? So just give that some consideration. That really is, it's not up to the methodology to necessarily prescribe that. The standard does give you some guidance, and you just need to make sure that your firm's policies and procedures actually give you the information, or rather give you the way that you need to do it, and then important, apply that consistently. All right, so just make sure that you update your policies and procedures when necessary and then follow those. All right, next up, a specifically important term or concept is where the work is being performed. So we have one of two terms here. Firstly, if the audit work, and I include for that also include the risk assessment procedures. All right, so if audit work that is performed either centrally or at component level. Now these are terms from the standard as well. Centrally is basically where the group auditor performs all the audit work on this class of transaction account balance or disclosure, and the standard describes it as being on one population that includes or involves several components. So that would be, for example, where and the factors to consider is also there at the bottom of the slide to say in determining if you can or want to audit something, an account balance centrally. You need to consider to what degree the activities are centralized. So to what degree is the group company doing all of this? Because otherwise it might be difficult to actually audit it centrally if you still have to go to all the components. Not impossible, but still. The nature and the extent of the commonality of controls. If the controls are common across all the components, it's easier for you to determine, right, I'm going to audit it centrally because everywhere the controls are the same. And then the similarity of the group activities or the group's activities and the business lines. So let's say you want to audit revenue centrally, but if they've got different business lines and different types of revenue, might be a bit tricky to audit all of that centrally. Apologies, it seems I'm talking more today than I have for the last few days. All right, so those are then your factors to consider. So let's think about the practical implication there. If I say that I'm auditing an account balance or class of transactions centrally, it means the group auditor performs the work on basically one population. Right, so if I'm going to go sample, to make it really practical now, I'm not going to do 3, 4, 5 samples. I will have one population that comprises all the, let's call it revenue, operating expenses, whatever it is, all of those items in one population, and I'll do one selection of one sample selection and test those items. Then I'm auditing centrally. If I'm auditing at component level, and I want to include the word only here for the moment, at component level only means that the component auditors will perform the work on each of their components. All right, so then we're not auditing from a group company perspective or even a consolidation perspective. The at component level is auditing every component's population, every component's transactions, every component's account balance at that component, and the group, sorry, not the group, the component auditor is performing that work. Right. Then, centrally, where the group auditor also performs work with the component auditor is another option. So to say, for example, the group auditor might do some of the work, maybe the holding company's work, so it's not just an investment holding company, it's actually also an operating company. Then we can say the group auditor is going to do some work centrally on the holding company, and the component auditors are going to do some work on the components. And of course, you can get a variety of those. And then the last option is something that we also added in. Actually, if I remember correctly, it was after some level of testing where we said, well, actually also sometimes there are consolidation balances that actually only come about as a result of the consolidation. So it's not even in our previous example where we had client holdco. It's not even in the trial balance for client holdco. It only really comes about when we look at the consolidation balances. So those are my 4 options of, first of all, where and how, if I can put it that way, to perform risk assessment procedures. So will the group auditor perform the risk assessment procedures only? Will the component auditor perform the risk assessment procedures? Will both the component auditor and the group auditor, or is this a consolidation balance only and therefore only the group auditor can perform it? Right. And that will then apply to your risk assessment process, and you will also then consider where the further audit work will be done. Who will complete the detailed procedures on the work programs? Right. Even if the component auditors are doing most of the field work, the group auditor will still have a work program to complete and considerations. But you can imagine if I say the work will only be performed, the detailed testing for inventory will only be performed at component level, what is the group auditor going to do? He or she is not going to retest all of that. Okay. I see a question coming in up. What option will be selected if the group auditor does not want to involve the component auditors, but also is going to select one sample? I'm wondering now if this is the full question that I'm reading. Let me just increase the size of my column here. Yes, so I'm only going to select one sample. I'm not going to involve the component auditors. I've got one sample. I want to test it all as group auditor. That will be centrally. Right, then I select centrally. Group auditor performs work on one population, one sample. All right, good. Then that was then important concepts. And then we move on to the audit process. So the audit process specifically, and then seeing where we are linking all of the requirements into the methodology. So what we've taken is I've really taken a caseware file, and we're going to work through each of the documents, through the slides, and then the methodology, and then the actual file, and then look at the slides a little bit, and then at the file. So we're going to start now already. Yes, I know we've already been going for 50 minutes, so I'm already starting to get out of breath, but it's fun. I'm excited to share this with you. So we're going to carry on straight. If you are feeling, oh my goodness, can't it be the break time yet? No, unless you want to carry your laptop with you or something, that could probably also work to go get another cup of coffee. But otherwise, we are going to take a break at 10 o'clock. All right, so don't fear. We will take a break. Right. Good. Starting then, the first thing I want to stress, and I've been thinking about where to put these two slides. I would have wanted to start with them, but I thought no, and then I'm going to probably confuse you. There are two amazing resources that Christine Rousseau put together for us to help us, and I include myself with it because I promise you I've got them printed on my desk here, to help us to understand and see where do I go in this whole thing. If you get confused and you're not sure what to do, you can go back to these two decision trees. Now, the first one is the decision tree for planning the risk assessment procedures related to classes of transactions and account balances and disclosures, and of course, what resources to be used. And so we've taken the whole decision tree with steps there, including the document numbers where you will be documenting, where you will be considering these items. I've included a link here to the decision tree, so from the slides you'll be able to follow that, but I have also asked the training team to also send you those links in the email after the training. So you should be able to get to this. Let me just, so I've obviously just made a screenshot and to show it to you, but I also want to actually show you the document on the success community. So I've literally just clicked on that link from the slide. It's taken me to the success community. And that's where this decision tree is, the one that talks about how to plan the risk assessment procedures that are related to classes of transactions, account balances, and disclosures, and the resources to be used. So it's on the success community. Please go and use that. That one is really, really helpful just to help you remember when are we going where, because you're going to see, especially if you haven't done an audit yet, you're going to see you jumping back and forth and back and forth and back and forth. So it does get a little bit tricky sometimes. All right, that's the first one. The second one then, is then the decision tree to help you to see who and when, how do I respond to the risk of material misstatement at assertion level, and then of course the selected assertion. So in groups, how and where do I respond to this? How does it work? What happens with things like, for example, when I said, but the component auditor is going to audit it? What happens in my file and so forth? All right. So again, this is on the success community. On the success community, I've got the second decision tree as well. All right, so use those hyperlinks to really get to these resources and make use of them. They're basically just a user-friendly way of, I don't want to say not reading the what's new. I think Christian will probably be very upset if I say that, because the what's new are like, oh my word, it's like my textbook. I refer to those all the time. I actually literally have the what's news pinned to my menus so that I can go and look at those at the what's new guidance per document, the features, etc. as we go along. All right, so those are the two resources. I'm not going to actually make them bigger and follow the decision trees and show you the little bubbles and all those things. Go and use them, go and have a look at them. I'm rather going to use the slides and give you additional information as we go through the process. Right, so for the purpose of today, today's session, I've decided to choose the 4 different scenarios that we can have, that we can come across. The first one is goodwill, being the class of transaction account balance disclosure that we have. And there I've said that we are going to consider the account and we're going to say this is a consolidation balance only, which I agree, I'm sure you would agree with me, is a consolidation balance only. And so who's going to do the work on that? The group auditor. And we're going to follow the process of the planning and risk assessment through to the work program and see how is an account that's consolidation balance only treated in these documents and in the process. Next up is revenue, where for today's purpose, I've said, well, obviously it's not a consolidation balance only. There are different entities that all have have revenue, and in the one component, I've got two components, but in the one component, I've got similar activities, common controls, and so therefore we could then audit some of those centrally, and also then have the component auditors also help us. Right, so that's I want to use the word combined approach, but I'm cautious of using the word combined approach. Just now you think that means we're going to do controls and substantive testing, which is not it. So let's rather use the term centrally, component auditor with group auditor. Okay, that's the approach we're going to do for revenue. Or who's going to perform the risk assessment procedures, and in all likelihood then also our planning at this stage is to say they are also going to go do the field work, the further audit work. Then investment property, I've decided to say, well, firstly, this is not a consolidation balance. They are all in the separate entities. There are no similar activities, centralized activities, or common controls. And so in this case, we are going to let the component auditors do the work only. Right. Of course, as group auditors, we're going to review their work. But as group auditors, we are not going to do any work centrally. We are only going to let the component auditors do the work. Then for property, plant and equipment, again, not a consolidation balance. There are similar activities and common controls. I just wanted to pick an account that is likely to be like that. So let's say they actually manage the property, plant and equipment from the holding company side. You can now imagine your own scenario, but you will also see that in terms of being able to actually show it to you in the documents, I wanted something that's also relatively high up on the list. So PPE for today is going to be audited centrally by the group auditor. Right. Good. So let's see then, first of all, I was going to say the theory or the background, and then we're going to go from there. So we start, as always, in 1020 engagement type, and we are going to complete our engagement acceptance and continuance work. Right. Now, what you will see, and I'm actually just going to stick on this slide for the moment, is you're going to see that we're going to jump back and forth, or it might feel to you like we are going to jump back and forth quite a lot. Just to show you, even here, we're starting off on 1020, then we'll move to 1120G, which is quite far off. Then we come back to 1020. Then we go 1050, 1050G, and then 1120, and then almost even come back to 1051. So there is going to be a lot of back and forth. There's going to be a lot of, let me go check here, let me go do some work there. And even you would have seen there's a duplication of 1120G, because at one point I'm recording entities, then I'm recording components. So there is a lot of jumping back and forth. Why? That's the first question. So in determining whether the group should accept or continue with this audit engagement of the group, there are requirements for the group auditor to obtain an understanding of the group and its environment, to determine whether sufficient resources are there and whether you can actually do, I want to say, a compliant audit. And for that to be done, for you to be able to conclude on those decisions, you need to know which entities are included in the group. How will that probably be done in components? How will I split them in components? Are we likely to rather audit the items with the component auditors or centrally? So a lot of those considerations, at least initially, at least in draft format, if I can put it that way, needs to be considered at take on engagement, acceptance, and continuance stage. So yes, you might end up changing that later on, here and there, where you come across additional information, where you now go and do your understanding of the system description and then maybe realize a bit more. But there is a lot of stuff that needs to be done upfront. Right. Now, the next question then was, are we therefore going to do that work in engagement acceptance, pre-engagement planning in section 10, or are we going to do it somewhere else? Are we only going to do the information later? Are we going to do it earlier? Where are we going to do it? And so the decision was then taken to say, let's rather guide users in the documentation of the engagement evaluation document 1020, Let's rather guide the users and say, next step is to go to this document and do those parts. Next step is to go to that document and do those parts, so that you know that you are following the thought process as required, not leaving anything out, even though the documents where you are going to need them later on will be at different spots, different places. All right, so that's just as background for you to understand why in this world are we jumping back and forth in the planning stages. Right, it's not just for no reason. There are very good reasons, and a lot of consideration was given as to what would be the user's preference, what would be compliant with ISO 600, etc. All right, so before we start jumping around, let's start with engagement evaluation. Right, so no surprise there then that we are going to select the engagement type, as I've already shown you. We then also have, over and above the normal considerations, we also then have guidance that shows us the steps to follow in terms of understanding the group and the environment, which entities and business units are there. You'll remember that we had said earlier on that the different types or the different ways in which groups can be structured are basically summarized or compacted into the term entities and business units. We also then guided to say we need to, at this stage, consider whether work can be performed centrally and what components we are likely to have. So let's go and have a look then in engagement evaluation to see where are those elements. All right, so we've already then indicated the group audit multiple entities. And what you will notice is that I have mostly completed the file. There are one or two places where I'm going to actually click things for you. So the file is mostly completed already to show you all the elements, but I am going to just highlight a few things for you. So first of all, at the top, you will see that we've selected Group Audit Multiple Large, and I have selected the extended option for the extended profile, just so that we also seeing everything that is included. All right. Then when we get to things like management and those charge of governance, remember this is the file where we are wearing our group hat. So this is not a separate entity, and so therefore we are discussing or considering things like group, those charge of governance of the group management, etc. All right, then if I can go to, oh, hang on, that was too far. Engagement continuance question 29 in my file. So it's not always going to be question 29, right? But in today's file, question 29. So there we have the question to say, did we obtain an understanding of the group and its environment, including the organizational structure? So it's basically saying, look, normally you'd only go and do 1120 inherent risk assessment later on, but we're now sitting with groups. So maybe you should go to 1120 inherent risk assessment, where we normally consider the entity and its environment, and go and consider and document the group's environment and the group itself. And then further also, you get an instruction to say, add the entities and business units in the group by clicking on the risk button. So then I went ahead and clicked on the risk button. Let me just show you in the next field what that would look like. So in the next field, this is our record button, which you are probably quite familiar with. However, there's a new option included there to say, add an entity or component. And if I then click on add an entity or component, it gives me the functionality to, guess what? Yes, add an entity to the records or add a component to the records. And those are both done in 1120G. So no surprise then that once we have recorded those items, the hyperlink is there to 1120G. All right, so at this point in time, we've documented our considerations, all the preconditions for the audit met, etc. And we say, oh, let me go and document which entities and business units there are. So I then go to 1120G, which obviously you would have done through that hyperlink. I'm going to open 1120G for us and show you what it looks like. Good. I'm just waiting because I know there's a lot of data that travels. So I'm just giving it a moment for it to actually change before I talk too much. And then sometimes I know the visuals get preference to the audio. All right, so in this document, this is now the identification of components. And this is where we will then record the business units and entities. So in this document, also note that at this stage of the audit of my process, I will only complete everything up to, let me actually just activate my, sorry, just want to activate my laser. I think that's gonna, no. So I only have to complete everything up to the point where I've got this big black line in my header to say, actually, you're not identifying components yet. So this part to the right, we are only actually at the point of saying, oh, sorry. We're only at the point of saying, let's document the details of the entities and business units. All right, so not that identifying components, we're just documenting the entities and the business unit. So what have I done here? Now, also just if we have a look, hang on, let me start by the first thing. When I get here, I will always see the consolidation option. So there is a business unit, an entity, and a component called consolidation, which is really for those elements where we say this is a consolidation balance only. So you cannot delete that, but if you desperately don't want it, you can edit it to make, then call it, let's say, client holdco or something if you don't want that in there. You can also call it something else, but you will need the consolidation to be able to actually allocate it. So in order to add additional lines, you can see I added 4 new lines. There's a button right at the bottom that says Add Entity. And what it simply does is if I click Add Entity, it literally just adds a blank line for me to complete. Right, so that's very simple to complete. No hectic dialogue or anything that opens up. And then I will document what is the type of relationship of this entity. Is it new, existing? Is it maybe derecognized this year? What is the country? Operations and activities, the nature and locations, the year end, the framework. Okay, because remember, it's possible that even though that my framework that I'm using in the consolidation is IFRS for SMEs, or IFRS maybe, that the specific entity may be using a different financial reporting framework. And if there is a type of engagement on this applied to this entity, what is that engagement? So not relevant, prepared by management, the compilation, etc. How is the financial statements done? And then only later will we come back to identify components. So at this stage, you're not required to actually identify components, and practically you actually can't yet, because we haven't considered what is actually happening in this entity. Remember those 3 elements that we mentioned earlier on, similar activities, common controls, etc. All right, so this is what I will come and do in 1120G. I'll go and record the entities and business units, and then I will go back. So that's what we've done now. We've recorded the entities and the business units. And as I say there on the slides, we just did the first step. And then we go back. We're done in 1120G, and we go back to the engagement acceptance, because we weren't done with that yet. We need to go back to it. Okay, so I'll go back to 1020 and say, right, you asked me to go and document my understanding of the group. Oh, sorry, guys. You asked me to go document my understanding of the group. I've done that. I've completed 1120, where I maybe documented some things about the group itself. I've documented 1120G, where I've identified the business units and the entities. What's next? So the next question is to say, determine whether the group have shared service centers, centralized activities, and common controls. Okay, where do I do that? Well, the instruction says go to 1050 and start with planning the extent of risk assessment procedure. So it really helps us step by step. Okay, so this is now 1050. So this is the old gathering information, still gathering information. There's just an element that was added to it. So let's have a look at what happens in gathering information. All right, so of course, we start off with what types of risk assessment procedures were performed. Nothing surprising there, but we now have the part that talks about planning the extent of risk assessment procedures. And there are a few prompts there for us. Firstly, do the entities or business units within the group have similar activities or business lines? I've said yes to all of these because I want you to see them in the next document. But if they don't have any similar activities or business units, you'll say no, and that's the end of it. But of course, because I've said yes, it tells me to go to 1050G, the document where I plan the extent of risk assessment for this group, and go and consider or indicate where there are these similar activities. We're not going to run there just yet, because for the moment, we want to actually just continue and see what other considerations there could be. The next one is to say, does the group use shared service centers within the group? If yes, great. If not, okay. Does the group centralize or process related financial reporting that are applicable to more than one entity or business unit within the group? And lastly, whether the controls are common controls. So if the controls are designed, intended to operate in a common manner across multiple entities, and that then being the term common controls. For each of these three elements, the items are actually switched on, the columns are switched on in 1050G, where we do planned risk assessment. All right, so we're going to go have a look at that just now. But before we rush ahead to that, let's just also consider the next part, and that is the relevant balances and classes of transactions. This is to some degree relevant to what we might have known in the past. That's where we would have gone and considered accounting and transactions and things. But first of all, it asks us to just consider a few things still with regards to groups. So first question, are there any amounts in the financial statements that are based on accounting estimates or fair value estimates only? Yes, and then again, we will go and consider in the group where those are relevant. Then, did we determine whether the relevant classes of transactions, account balances, and disclosures are only initiated through a consolidation process? Remember, if they're only through a consolidation process, we can only perform the further procedures through a central process or by the group auditor. And also, for the relevant ones that are performed centrally, whether further audit work can be performed if there's evidence that we can test one population for several components. All right, so that is basically saying the standard requires you to do certain things. Have you done that? Okay, you're going to say yes, and then again, it's going to say go to 1050G, please. Go there and go and complete those steps. Now, again, you can jump ahead, and back, but I like to just switch them all on and then go and do the actual work on that side. Okay, but by all means, if it's better for you to go to each of those, yes, do them. Or go to 1050G, complete them and come back. Do we plan to involve component auditors in risk assessment procedures, considering that whether we have determined to doing them centrally? And there, are we going to, so what do we mean by that? Are we going to use component auditors to get an understanding of accounting estimates, to review accounting estimate biases, and to obtain an understanding of information systems? So that is system descriptions. And only once we've then answered either one of these two questions, only then do the rest of the audit considerations get activated. So ideally, we should first go and complete 1050G then before we continue with the rest of the audit considerations here. Right. So let's then go from here. I've already answered all of the other questions. But we can then basically go to 1050G. I just want to quickly show you one thing. I'm just waiting for it to synchronize. What's also been added here, you will be familiar with the concept of additional disclosures. So where the question said, are there additional disclosures not linked to a class of transaction account balance or disclosure, or an item in the financial statements rather? If that is the case, then we would, then you could have answered, let me actually just show you that, significant disclosures. If that was the case, you could have activated additional disclosure sessions. Do you remember that? Okay, so what's now been added, so this was for the disclosures. What's now been added is just another functionality similar to that, but with other areas, significant other areas in the financial statements, not dealt with within a specific financial statement area. So now we've got disclosures 1, 2, 3, and we also have possibility of other areas 1, 2, 3. Of course, please, you can rename them. They will rename all the sections, etc. I see another question coming in. So let me just quickly go back to, I see it says question 7. So I'm going to just quickly go up there. Question 7. Okay, so the question says, if we say yes here, does it mean that we did do the consideration to say, did we determine whether relevant classes of transactions are only initiated and accounted for through the consolidation process? And did we determine whether further audit work for relevant classes of transactions, account balances, and disclosures will be performed? So the question is, did you do those two considerations? Yes, then you can move on. If not, please go to 1050G and go and complete those two considerations. So it's basically just a different way other than saying, first go and do the following. Consider if classes of transactions are only created through consolidation basis. Consider if further audit work will only be performed centrally. And then, well, what would you have done then in terms of a yes, no? So yes, the question or the prompts, if you want, is worded in such a way that they are as questions to help you, to prompt you to see what you need to go and do next. All right. So the rest of the questions then, for now, you can just know that's what the rest of the questions are. Let's go and just have a look then at what is in 1050G. I just want us to go and have a look at the slides as well so that I can show you the right slides. Oh, hang on, sorry. You see, there was one thing I forgot. In terms of gathering information, the questions will appear, but for group audit multiple, let's put our hat on again. Our hat on says that we are auditing only the consolidation. So some of the questions included in gathering information is not necessarily applicable to the group audit, the consolidated financial statements and the group audit, because some of them might be entity type questions, things like that. So the question then is, do we need all of those questions in 1050? And even if you take it a little bit further to say, when we're going to go to transactions and balances later on, do we actually need to go and consider the accounting policies, like is there an accounting estimate, all of those things for every one of those items, even if the component auditor is going to do it? So the answer here is that, or the solution is that some firms are always going to want to have the questions on. Some firms are going to say, no, I don't want those questions on group audit multiple. And of course, some firms are going to say, in some cases, I'm going to want it, and in others, not. So you may already be familiar with the principle that we have for having Probe firm settings options, where you can then decide how to do it in your firm template. So the firm author, the person putting together the firm templates, will then be able to decide whether, when you have group audit multiple legal entities, all right? So this is not audit single, this is audit multiple. When I've got audit multiple, whether I want to answer or complete the questions from a group financial perspective. All the questions in 1050, remember the opposite to that is not no questions in 1050, it's just the questions that are relevant to the group. will still be in 1050. And then also the transactions and balances for every class of transaction account balance and disclosure with a current or prior balance in 1051. That's your transactions and types and volumes of transactions. So that will be as you would have done for a single audit, for a normal audit in the past, or also if you have a single group audit, then you will still complete all of those items. But if you say for group audit multiple, you know what, in my group file, I don't need to basically duplicate, possibly, some of the points that are actually applicable at the company level into the consolidation file as well. I only need the considerations around the consolidation in the consolidation. The companies will have the company relevant considerations. Then you say, well, no, then I don't need those questions. So just to say, the default here is that this will say not required. So the default will say, the default template that's shipped, if you don't make any change, you will in a group audit multiple only be required to answer the questions in 1050 that is applicable to the group, to the consolidation. And you will only be required to complete the transactions and balances part, there where we say, what's the subsequent measurement, accounting policy, those kind of things, were there additions, things like that. In those cases, then you'll only be required to answer questions when you decided to perform the risk assessment procedures centrally. In other words, risk assessment procedures performed by group auditor. Right. If you don't want it to be, almost want to say it as a minimum as that, you want more in your group audit file, then you will either pick required for all group audits, or you will say, well, let me pick this, let me choose this for the group audit files when I want it or when I don't want it. And again, this is applicable to group audit multiple. Right. Good. So let's go and have a look then at 1050G. Just before we go there, I think there's a question that's come in as well. How do we create this caseware file for group? Okay, so you will create a normal caseware file. That's actually a very relevant question, Gloria, thank you. So you will create the caseware file, a normal caseware file. You will import either the trial balance that's already been consolidated, so you'll have one trial balance, or you will use the consolidation function of caseware to consolidate all the different entities' trial balances, and that will then be your trial balance for the consolidated trial balance for the caseware file. So I think that's what, if I understand correctly, that's your question. How do I create the caseware file? You'll create a normal caseware file with your audit templates in there. And then in terms of importing the trial balance, you will either already import the consolidated trial balance, so one set of trial balance in there that's already consolidated, or you can import all the different entities into the consolidation function, do the consolidation, and that will then be your consolidation trial balance that you'll use. And then secondly, just as a reminder, in 1052, in the engagement evaluation, you will say, what type of engagement are we doing? We are doing a group audit. Let me show you that, make sure everyone is aware of that, in case you missed it. So right at the top, very first question, what type of engagement are we doing? We're not doing an independent review, we're doing an audit. Is it a single entity audit? In other words, in my terms now, the old traditional audits, just a single entity normal audit, or is it a group audit? It's a group audit, not a single entity. And then lastly, is it a single entity group audit? In other words, where the divisions or the branches are consolidated, or is it multiple entities that is consolidated? I almost want to say like probably your more traditional groups that we are thinking of. All right, good. I'm glad that that answered your questions. And then we've got all of that. All right, so we've discussed the firm settings in terms of how I can then get that answered or included in there. Right, that's been shown for the questions. These obviously work similar to the others that you can see in that same section. For the analytical review, do you just want to do it in 1051, or do you want to do 1052 in detail? Do you want to show record the types of procedures performed, the risk assessment procedures for every account, or just at the top of the document, things like that. All right. So next up then, we're going to 1050G, planning the extent of risk assessment procedures. Now we're going to start with this one, and then we're going to take a break in 5 minutes, and then we will come back and carry on with this. Okay. Sorry, I see another question coming in. What if the entity doesn't do consolidation, but the, what is the term now? I can't remember what that term is. So if you've got associates and other type of engagements that also basically makes up a group of financial statements, that will still be your group financials. Okay. So it doesn't have to be a pure consolidation, it could also be the other options. Right. In terms of planning the extent of my risk assessment, what will happen in 1050G? Remember now in 1050, we were asked to determine whether there are similar activities, centralized activities, or common controls. We were asked to determine who will be doing the work. So initially, where will the audit work be performed? And with that, to some degree, whether the component auditors will be involved. So that's ultimately what we want to get to. But if I show you the document now, I don't want you to get a fright in terms of the questions or in terms of the different columns. So let's just remind ourselves again of these different options. We've got basically 4 combinations. So the audit work will be done either centrally or at component level, or a combination of that. And then centrally will be where the group auditor performs work on one population for several components. And then at component level is where the component auditor performs work on the component. So I might again have more than one component auditor if I have more than one component, or of course one component auditor may be auditing 2 or 3 components, right? But that's at component level, component auditor. Then centrally, where the group auditor and the component auditor or auditors are involved. And the last option is where we have consolidation balance only, while then there's nothing in the component entities accounts. So then that can only be the group auditor. But we didn't call that centrally because that only then actually happens or comes about at consolidation level. All right. So that's what we're going to do on 1050G. Now, let's have a look at what are we seeing on 1050G. Just open that document. Right, so this then is the document 1050G, the planning of the extent of the risk assessment procedure. So yes, we are determining who's going to help us with the risk assessment procedures, and then also basically saying who do we think are going to probably be doing the field work. So those two are kind of linked to each other, but don't worry, you can obviously change it later on if you learn new information. So without going into the details, let's just look at the columns, and then after the break, we can have a look at what we've completed in this document. So we start first of all on the left-hand side with the classes of transactions, account balances, and disclosures. And we say, what are those classes of transactions, account balances, and disclosures? It's the sections that we are used to. The current year balance, the prior year balance, and then initial questions to say, is this a consolidation balance only? In other words, will this balance only appear at consolidation level and therefore not in the individual accounts? And then also whether this is based on an accounting estimate. Of course, if this section is based on an accounting estimate, we would need to go and document in the, I almost want to say the old, because it is old already, but in our 1053, the understanding of the accounting estimates document, we will need to go and document our understanding of that specific accounting estimate or the accounting estimate on that category. Also, if we are saying that there is an estimate here, what is really lovely in the latest release is then actually the accounting estimate will already be ticked for you in 1051. If you are to choose to do the work centrally, you will not have to go and actually do the tick in 1051 as well, where you are saying what types and volumes of transactions, what are the transactions and balances. Oh yes, there's an estimate, I need to tick it. No, it will already be ticked for you. Right, so we really are trying to also reduce the number of ticks for you. Then, after considering what is the class of transaction account balance disclosure, we say determine whether work can be done centrally. And we've already considered those or spoken about them. Firstly, the question whether there are similar activities and business lines across the group. And if we say yes, then we need to allocate or say which they relate to. Secondly, group centralized activities. In other words, does the group have activities that are centralized? And if so, link those ones. And then the third one, common controls. Are there common controls? If so, list the ones that they relate to. Okay. Then, based on this understanding that we have of the individual activities, we will then go and say, do we plan to perform risk assessment procedures centrally by component auditor, centrally or not? And then if centrally, well, then we'll be guided further, but then to document, right, who's going to do the risk assessment procedures? Is it going to be the component auditor? Is it the group auditor? Is it a combination, etc.? And then we'll have the comments column. Just a thought now already that we will have where we did say like component auditor here, the last column is only activated for the extended profile to then give you a space to further document the involvement of component auditors in the risk assessment procedures where you indicate such. All right, so those are the columns that we have at this stage. I think it's a good time for us now to take a comfort break so we can come back then and go and see how did we then treat each of those 4 instances that we are working with. I will also in the break have a look at some of the questions that have come in and just see how we can respond to those. All right, so let's have a comfort break. I'm going to say about 10 minutes, but I do also just want to go and get a cup of coffee for myself. So it might end up being 11 minutes, but let's say 10 minutes, and then we will continue. I'm going to put a countdown for us so that we can also see how much time is still left. Right, so enjoy your break. Right, ladies and gentlemen, I hope you had a lovely break. Let's just wait for the screen to change over. Right, I had a look at some of the questions. I just need to see that I did. All right, so the one question that I hadn't answered or responded to yet, is whether the group auditor can make use of documentation obtained by the component auditor when performing the work on one population. In other words, centrally. So the auditor's going to, the group auditor is going to do it centrally, but he's going to get documentation from the component auditor. Now, I think I want to just answer here to say it depends. I'm sorry that that's the answer, but I think we need a little bit more information. So, for example, let's look at some considerations. If the component auditor is just the, I was going to say, the obvious choice to say, dear component auditor, please can you help me to get the following invoices so that I can look at them, rather than you sending someone there and then those are part of your selection made and you can then inspect them and do the work. Yes, by all means, you can then say centrally. I'm just not sure that it would necessarily make sense. So I'm going to select one sample of, let's say the sample comes to 20 items, all right? Just a random number I picked. And now 5 of them are done by the component auditor. And I say, there's your 5 items. You go and look at those invoices, send me the answers. I don't think that would necessarily be a way to say, well, it's done centrally. It would probably, I guess it could also practically work that way. Whether that is necessarily what the standard set is intended, I don't know. So maybe also just to make it clear, is it would also be about where you document the results. So if my working paper in the group audit file is going to say, here are my 20 items that I've selected and here are the results from that, compliant with ISO 238, these are the invoice numbers, these are the dates, these are the customers, or whatever it is, all of that information. If I've got all of that on my working paper in my group audit file, then I can probably say it was centrally done. Practically speaking, the question may sometimes then come in to say, well, what if my component auditor is sitting somewhere else in another country or somewhere, even just in another firm, and says he's not sharing his working papers, literally sending it to me to be included in my audit file? Then that will probably not work. So I'm hoping that that was a balanced response to the question whether the group auditor can make use of documentation obtained by the component auditor when performing work on one population. All right, so that is then all the questions up to this stage, and we can then carry on. Right, so before the comfort break, we had spoken about the document 1050G, the planning the extent of risk assessment procedures performed. Now, I want to say that when I was looking at this document way back in the start of the development, it was still an Excel document. It's a lot of columns. I admit it is a lot of columns to consider. So I really am trying to break it down to you in terms of how the layout of the document is so that you can follow it from that perspective. Right, so the class of transactions, account balance disclosure, that's not necessarily new information for us. And then if we look at the questions that we ask ourselves and then link those back to our scenarios, our 4 scenarios being goodwill, which is going to be done by the group auditor because it is a consolidation balance, and the property, plant and equipment that will be done by the group auditor only, but centrally, investment property that will be done by the component auditor only, and the revenue that's going to be done by both the component auditor and the group auditor. So let's have a look then at what the documentation is going to show you. So remember, I thought of those 4 scenarios in order to be able to show you the examples. But if you actually come across these scenarios and different combinations and numbers of them, etc., it's going to be after you've gone through this and said, oh, I see, I haven't considered these things, this is what my conclusion is. Right. So now we can just see where we go with it. So property, plant and equipment is not a consolidation balance only. So in other words, and there's lots of guidance, light bulbs for you as well. But this is a consolidation balance that is the result of the individual entities' balances together. So it's not only a consolidation balance like goodwill. Goodwill is almost my favorite example. That only really comes about at the group level. So no, it's not a consolidation balance. Are there accounting estimates and property, plant and equipment? Yes. Depreciation, useful life, residual value, etc. Then in this client, I determined that there are similar activities and business lines across this group. Okay, so that's one of those 3 questions to say, are we going to do it centrally, yes or no? And that's the scenario here. I then went ahead and said, add entities. And then I don't even know if you can call this a dialogue, but I was then given the option to select the entities that are relevant to this, or that have similar activities in the group. Okay, so click submit and they're all there. Then whether they are group centralized activities. So yes, the activities are similar, but they are not centralized in our business. So I said they are not centralized and there was no entities. There are common controls. So the controls were designed to be more or less the same. And again, same entity selected. And then to say, do I plan to perform the work centrally? Am I going to select one sample? And I said, yes. Right. So it doesn't have to be centralized activities in order for me to get one population. I can obviously make up the population from the different fixed asset registers in this case. Good. Then I decide, am I going to perform this centrally? In this case, I said yes. And if I say yes, let me just properly select the yes. If I select yes, I only have the options to say group auditor or centrally component auditor with group auditor. Those are the only options I have because I said centrally. Okay. That's PPE then. Okay. The next scenario is investment property on the cost model. And there we said we're going to do component auditor only. Okay, just to see how these two are then different. So it's not a consolidation balance only. It is not based on an accounting estimate, which I guess one can also reason back and forth. I guess we can make it a yes also because it is on the cost model, so there will be depreciation. Okay, so I've changed it to yes now. Similar activities, we said no. No similar activities, no centralized activities, no common controls. They just have their different investment properties. Can we perform the work centrally? Well, actually, if you don't have any of those 3 items, then it's just not possible to perform the work centrally, or not likely that you're going to be performing the work centrally because it might not make sense. So I said, no, we're not going to perform the work centrally. And so if I say no, the only option I have is the only one that doesn't involve the group auditor, and that being the component auditor. Right, so there then at least only the group auditor, only the central, only the group auditor, only the component auditor, those two then in contrast to each other. The next one is goodwill. What's different about the goodwill one? We said this is the one that has a consolidation balance only. So I said, yes, it's a consolidation balance only. Yes, there's an estimate. Why is there an estimate? Well, for us to determine how the goodwill came about, there's fair value determinations. And so therefore, this is also a change in the latest release. So if you have been working on it and you say, hang on, it didn't work like that. Yes, it's new. Then you don't need to consider any of these things because you are only going to do this at group auditor level. You are only going to do this at group auditor level. So it doesn't matter if there are similar activities. Well, actually, there can't be similar activities. It's only a consolidation balance. There's no common controls. So those things don't have to be, you are saving a few clicks here to say, well, actually, those are irrelevant questions. Are we going to perform it centrally? Doesn't actually matter. You know, another click that you're saving, you're just going to select consolidation group auditor. That's the only option you have because you said it is a consolidation balance. Okay, good. So that's 3 of our 4 scenarios. Now, lastly, we're going to go and look at revenue, which is where we said we're going to do the Oh man, I'm so tempted to say combined all the time. I don't know if someone's come up with a clever other word, you're welcome to share that with me. But with the central component with group auditor scenario. So for that, we go into revenue. Revenue, I said it's not consolidation balance only. In this case, it's not based on an accounting estimate. I did say, yes, there are similar activities. Who are the ones that are involved? Now, just note here, maybe it becomes later on, it becomes relevant or it confuses you or something. Here, I have not included subsidiary C. For subsidiary C, in my mind, this scenario, the client does not sell, manufacture and sell items. They just have investment property. Okay. All of them have investment property, but sub C only has investment property. So they don't have any sales that are similar activities to the revenue sales of manufactured items like client holdco and sub A and B. So that's why it's excluded from this linking here. And also you're going to see it's going to have its own separate component later on. No centralized activities, so similar activities, but not centralized, yet there are common controls, and therefore with these two items, I then chose to, nothing forces you to. So this is also something to note. You don't have to test centrally just because these scenarios are there. You can still choose to do at component level. So I said, yes, I'm going to perform centrally, but I then have the option to do group auditor only or component auditor with group auditor. And that's the one I choose for revenue. To a large degree, I'm picking this option because I want to be able to show you all 4 different scenarios. All right. So whatever the reason is that I chose to do it like that. Good. Just one other thing that I want to highlight here, and that's right at the bottom of this one, is that you can see I activated that other area. Remember, we had other disclosures, other areas. I activated other area 1. I did not rename it, so that's why it still looks strange. If you renamed it, it would show the proper name here. But other area then flows through all the way through wherever you have the section. You will also see it in those documents for all those other sections. Right. That is then planning the extent of risk assessment procedures. So if we go back to our slides and we say, what's next? Okay. What have we done? We've actually taken quite, done actually a lot of work already. We were busy in the engagement type, engagement evaluation. We were then asked to go and record the entities and the business units. We were asked to go and plan the extent of risk assessment at group level in 1050, then to do it per class of transaction account balance disclosure in 1050G. And then actually what you would do is you would actually end up going back to 1020 and say, okay, now I've done all of those things. Just want to wait for the synchronizing to change whenever I change a big screen. Right, so we started in question 29 on 1020, it said obtain an understanding, record the business units. In question 30, it said determine if there are those shared services, etc. In question 31, then it says, did we identify components? So that's the next step. So you can see if you're not sure where you are, just come back to 1020. It will guide you. It will be your map. Okay, and then to say, right, so you've now considered with risk assessment procedures, you've considered the business units. Now let's go and do document record the components. So I can follow the hyperlink and I can go then to 1120G. 1120G then being, 1120G being the identification of components. Now, that is the same document where earlier on we also recorded the business units and the entities. Right, so if you're thinking, hang on, we've been here before, look there, it looks familiar, eh? We've been here before. We started to record our business units, our entities and business units. What also happens on this document is ultimately the document name is also identification of components. So ultimately we want to get to the point where we can identify the components here on the right-hand side. Right. So before we can identify the components or allocate the components, assign the components, in this level of the document, we need to go and say, right, what are my components? And so using my document map, or alternatively, scrolling down, I then have the option to then add additional components. So once again, as with the business units and the entities from earlier on, I will already have one that says the consolidation. You can see that I've got consolidation activated. I then clicked on add component and I added the component 1 that says manufacturing. I added component 2. I just said other there. I guess investment property could have been a good one as well. And you can add the number of components that you want. Right. Then we go back to the entities and the business units to go and allocate each of those entities and business units to the relevant component. So I click again using my document map. I'm quite fond of the document map, so I just click rather than scrolling up. But once you're comfortable, you'll probably know, oh, let me just scroll up. Unless you've got lots of businesses and entities, business units and entities, and then scrolling up might take a while. You might rather want to just use your document map to click. All right, so now I'm back at my business units and entities. Earlier on, we completed everything up to this point where we said, right, now I've documented the details. I know what type of engagements are being performed on those individual entities. Next up, we're going to identify the components. So first question, are you going to consider this entity or this business unit with other business units? And for the consolidation, I just said I'm assigning that, or that was already assigned to the consolidation component, and I'm keeping it like that. Okay. Now I've clicked on it, so I've got my little mesmerizing circle. Then for, hang on, let me just click there, right? Then for the others, I also said, well, for them, I said, yes, I'm going to actually allocate subsidiary A, subsidiary B, and the holding company to one component. Sub C, you will notice there, the second one from the bottom, I said, no, I'm not going to actually allocate that with other business units. It's a separate business line. It's going to be component 2. But all the others, you can see I've allocated them as component 1. Subsidiary A, subsidiary B, and client holdco. Right, this is all great and fantastic. I would like to actually now communicate this to the component auditors to say this is what we've done, or maybe to have another plan some other way. How can I do that? Well, fantastic. The team has provided you with an export button through which you can export the summary then to use in your communication with component auditors. There are 2 of these tables that can be exported to Excel. It's only these 2 tables so that you can go and filter and do what you need to for your group communication. In this case, it's mostly all the information in here. The other document, I think it's 1220G. I'll show you when we get to it. But there, it's not all the information that gets exported. It's only the table. All right, so this is not a let's export the whole document. This is we are exporting a table that needs to be used for the groups. All right. So what we have done in this step now is to then go and record the components and assign them. Right. Now again in my slides, I'm running ahead of myself, so that's what we've already done. And then just in your notes, when you have a look at the slides, you will see that I've also included a slide there to say in assigning components, that's done on 1120G. We record the components, assign the components to the units, and then we have the export functionality. Nothing says you must export, but you've got the export functionality. All right, now next up then, please don't forget then to go back to your documents, 1020, complete the engagement acceptance. Right, so we were only still busy here with engagement continuance, components, etc. We still need to go and complete, I want to say, all the normal things that you are used to for a normal audit in terms of the requirements of the ISAs. So you'll go and complete all of that and hopefully decide to continue with the audit. You will also go and complete gathering information 1050. complete the questions relevant to the group for transactions and accounting. All right, so those will all be there. And then you will also go and document the, well, next up then, to document the types and volumes of transactions. All right, now let's see, just again, to just make sure everybody is clear as to what happens, what do I see on 1051 for types and volumes of transactions, and what don't I see? Okay, I guess that's the second part. All right, so for group audit multiple, the default is that when I've selected, and remember we've done that now already, we've already indicated that for investment property, the component auditor will be performing risk assessment procedures. And for property, plant and equipment and revenue and goodwill, the group auditor will also be involved. All right, so what's the default that's going to happen based on that selection and firm settings? If we say we don't want to answer all the questions in 1050 for the group, we will answer those questions relating to the entities in the entity separate audit engagements. Then the default is that where a component auditor will be involved only to do the risk assessment process, there will be no transactions and balances section. I'm going to show it to you. And for all the others, we will see all the parts in 1051. Okay. Right, let's see what this means. If I then go to 1051, types and volumes of transactions, you will know already that you're gathering, what is the word now? Gathering information document says that you, that's where you document whether there's estimates, and then you have the detailed questions for estimates in 1051. You will be asked some questions like on, now I've hit the blank, but questions in 1051 that then pulls through to 1050, that pulls through to 1051. You know those questions from, almost want to say from the old days. You can see I've got a child that talks about the old days. Huh? All right. So now we are in 1051. We've done the overall level gathering information. We are now going to document the understanding of the types and volumes of transactions for our 4 classes of transactions and account balances and disclosure. Right, let's go. So we've started. You'll notice that I selected for our file that we are going to document the types of risk assessment procedures only once on the document. That's why you won't see them in every single one of the sections. And for property, plant and equipment, what did we choose there? Let's remind ourselves. We said this is where the group auditor will be performing all work centrally, so the component auditor will not be involved. So in our group audit file, we need to make sure that we understand the types and volumes. We have our lead schedules. Again, also I've picked for our file to say we do the analytical review in 1051. We're not going to do the separate 1052 just to make it simpler. And then we have our risk assessment procedures, so identifying possible ROM, that's in the file in any case. And then because the group auditor is doing work, we also have the transactions and balances section that's active for us. All right, so this is the normal ones that you will know. Notice I did not have to tick accounting estimates. I promise you I did not tick this myself. It was automatically ticked because in 1050G, I'd said, yes, there are accounting estimates involved in property, plant and equipment. And then I'll select the subsequent measurement and then I move on. Obviously, I did also consider the others, but there was nothing else to consider. I cannot move on from this asset register. Just want to say, yes, we do have an asset register. That is when we have the central only, group auditor only. Next up then is the scenario investment property. And what is special about this one is we said in this case, the component auditors are going to do the risk assessment procedures. As group auditor, we don't have to do any risk assessment procedures. We are going to rely on the component auditors, and they will tell us if they came across any risks. And if there are risks, we will record them in our audit file. All right, but we're not going to do the risk assessment procedures ourselves. So in investment property on the cost model, we still have the lead schedules, we still have the comments. We have the points to consider, unusual items, etc., like we would have had in any case. This is still there to help us to understand the account, okay? But what is missing? It's the types and volumes of transactions that is missing. Sorry, the transactions and balances part that's missing. So I don't see if the accounting estimate is ticked or not. It doesn't actually matter for us now because the component auditor is going to obtain the understanding of the accounting estimate. I don't know what the subsequent event treatment is. The component auditor is going to get that information for me and communicate that back to me. All right, so that is then the impact in the group audit multiple. If this was a group audit single, then I would have seen everything because I would have had one file only because it's the company is one entity. Goodwill is where we said the group auditor is going to do the work because it's a consolidation balance only. So I would expect to see everything here. And that's exactly what we see. The balances, the ROMs, and the transactions and balances, the ticks that may or may not be necessary to make. Okay, and you can see there, accounting estimates again automatically ticked because I've ticked them initially. And then lastly, in this case, is revenue. Revenue, we said, is this the group auditors with the component auditors. So it's centrally group auditors with component auditors. And so again, we have the lead schedule, the identification of ROM, and the transactions and balances and all the work involved in there. Right. I just want to make double sure it doesn't look like we've got any new questions, but I just want to make extra sure I'm not missing any. Good. Yes, it looks like we are all caught up on questions. Right, so that was 1051 then, types and volumes of transactions. And next up then is in our risk assessment and planning stage, is then the information system and control activities. And again, this here has a bit of a difference between the scenarios where we have only the group auditor involved and where we have only the component auditor involved. So let's have a look. 1150. So the first thing also that changes here is not only must we obtain an understanding of the accounting records and the financial statement preparation and the systems around that, but also because we have, and where we have, selected that there are centralized activities and or common controls, we also need to document our understanding of what is those centralized activities, what are those common controls. Okay, so that's the first thing we're going to see new here in the group file. And then in terms of the significant classes of transactions, account balances, disclosures, there we are going to also then see this link to, you said for the Scottabody, there are common controls. Now tell us more about the common controls for this item. Having said that, if we don't have a risk, so it's not the Scottabody, and we did not say that we are going to actually obtain the information from a, what is the word now, from a group level, we're not going to find the information here. Then it's going to refer us to the component auditor's work. Right, so let's have a look at 1150. Now I just need to click on the right thing. 1150, information, systems and control activities. There we go. Good. So there we've got, again, the normal things that you're used to already, types of procedures, elect whether you want to identify any additional items. And then we have a new little section here, a new bookmark called centralized activities and common controls. Now, what I've tested, I promise you this, is if you only have centralized activities, only the questions relating to centralized activities are activated, and the other way around, if you only have common controls. In our case, we've ticked both of them. So both of them appear in the section to say, describe how the group's centralized activities are relevant to the financial reporting, and describe the nature and extent of common controls. consider the commonality of the controls across the group, and then various other examples and things included in there. All right, so additional guidance, instructions, and so forth. Then for financial statement preparation, we have some additional questions. I'm just trying to find them now about the consolidation and about how the items are done. Just give me a second to quickly see them so that I can point them out to you. There we go. Question 6. Describe the following related to the consolidation, adjustments, and reclassification. So that's because we have a group, we have consolidation, and therefore questions about that. And then for the other significant classes of transactions, account balance, and disclosures, in other words, those categories where a risk has been recorded, and I'll tell you about the PPE risk just now. But for those sections, again, we've got the system description as we would normally have had. However, there is then a question to say, for property, plant, and equipment, you said there are common controls. Describe the nature of those common controls for property, plant, and equipment. And then also, whether based on our understanding of the centralized activities and common controls, do we plan to perform further audit procedures centrally? Yes or no? And then just a reminder to say, make sure that this is also the same as what you have picked in 1050G. So if you now change your mind, well, go and just update it. Otherwise, make sure that your documentation clearly shows that initially you thought about it, you decided not to. That's why some information will show or not show, why your system description may or may not be in the file, etc. So just make sure that you are consistent in your engagement documentation. So you can change your mind based on as you obtain a better understanding of the client, but then just make sure that your documentation is consistent. In terms of investment property on the cost model, now this is our funny one, hey? For investment property on the cost model, I said this is the account where the component auditor is going to do the risk assessment procedures. So yes, you would see later on, I've recorded a risk for investment property on the cost model. So it is a scottabody, but it's not audited centrally. And so therefore, yes, you are asked to obtain an understanding or to communicate the responsibility for the understanding to the component auditor, but you don't have the same level of extensive questions that you need to complete for investment property on the cost model, because the component auditor is going to do it. Okay. Remember, as with previously, you do have the option in firm settings to I think you do, if I remember correctly now. No, I can't remember now. I want to say I think you have the option to actually do it for all of them. But even if you, oh, it's the walkthroughs that we had the option for. Sorry, now I'm confusing myself and hopefully not confusing you. Even though you had that option for the walkthroughs and things, you cannot actually activate the sections. My goodness, just give me a second. I want to just, oh, there we go, 1150. You cannot activate these sections in 1150 by switching on more things. Your primary consideration here is to say, who is doing the risk assessment procedures? And in this case, it's the component auditor, and therefore it won't be switched on in 1150. All right, so I hope that's clear. That was investment property on the cost model. Then goodwill is not even switched on here, so you might be able to identify the little blue one here somewhere in the middle. If you can't, don't worry. It's not a scottabody. There's no risk recorded for the goodwill, not in this file yet, and so that's why there is no requirement to obtain an understanding of how the goodwill came about. Okay, we didn't record a risk. Yes, okay, maybe we will still record a risk, but at this stage there's no risk, and so showing you the file, if the file was perfectly completed today, that doesn't have any requirement in the information system. And then for revenue, that's the next activated section. For revenue, we've got, of course, our fraud risk, and I didn't rebut it. So we do have a scottabody for revenue. And so therefore, as you would expect then, documentation requirements, including then the question about the common controls that we had for revenue. Okay, and again, to say, do you still plan to then do the work centrally, or do you plan to do the work centrally? Make sure that your answers on 1050G agrees. 1050G said we're going to do it centrally with the component auditor and the group auditor, so we know that it does agree. Good. So that's 1150. I know there was a little bit of uncertainty sometimes in the beta testing phase, so that's why I wanted to rather just unpack these for you as well. Next up then is the risk assessment at assertion level documents. So this is, I almost want to say, the culmination of our risk assessment procedures, our understanding and all of those items. So what are we going to see on 1160 that's different for the group? So the consolidation process is now considered a risk factor, or an inherent risk factor rather, where you will then select also the entity or the business unit to which the risk relates. I'm going to show you the risk that I recorded for property, plant and equipment, where that is then done. And then remember the impact on 1150 for Scottabedies in the group file when done centrally, or communicate to the component auditor, as we had seen now in 1150. All right, so let's just see then 1160, where I've recorded the risks. Okay, right, I want to actually just make it slightly bigger. Good, I see the synchronization is going. Right, so here we are again going to look at those 4 areas that we have. So property, plant and equipment is the account that we're going to do centrally only, so group auditor only. We have recorded a risk. So let's see what that risk is. I'm going to go into edit risk just so that you can see what that looks like. So here in recording the risk that I raised, you'll see it later on as well, is I said that there is this risk that the investment properties that the individual subsidiary has, so sub C, is considered to be an investment property because the other companies are renting it from them. But of course, at group level, this is not an investment property. That is then actually part of PPE. It's part of our own buildings. So there is a classification risk under AVA that the investment property or the building may incorrectly be classified as investment property and not as a PPE, as a building. So from that perspective then, what is the reason for us raising this risk? It's not complexity or subjectivity or anything. It's because of the consolidation that we are raising this risk. And so we've got this new inherent risk factor then added there to say, this is identified because of the consolidation process. I didn't complete the implication there. I mean, that's obviously then just incorrectly recorded. I picked the classification assertion, recorded it as a medium risk, and here you can also see that I can then allocate the entity or business unit to which this risk relates. Right, and in our case, I've then selected subsidiary C. Good, so that's that risk. And I'm going to exit risk mode just so that we can see the rest of the document. Right, so for property, plant and equipment then, in this case, we have a risk recorded, not a significant risk, and the assertion that's relevant in this case is AVA, or then classification in our scenario. I'm just waiting for this thing to still update the risk or close the risk dialog, but we can move on to investment property so long. So this is literally just recording the risk. You can see all the inputs that are recorded there. For investment property on the cost model, very similar. Same risk recorded, same assertion, that's the problem. And so also then just moving on from there. We haven't yet on this document then, there's no documentation here to say, oh, you know, it's going to be done by the group auditor or whatnot. We are assessing the risk here only. We're not responding. And then next is our goodwill one that you can also already see there. We have not recorded any specific or special risk. We haven't recorded a risk of material misstatement for goodwill. Yeah, so later on we will pick the relevant assertion just to show you that as well. But, or yeah, well, it's the selected assertion, not the relevant assertion. But just to show you, it is in there. We haven't recorded a risk. We haven't linked any subsidiaries or anything like that to it. The next one, the fourth scenario then, is the risk assessment for revenue. We've recorded a risk, a normal risk, the fraud risk. I've also allocated it as a inherent risk factor of fraud risk. So no consolidation risk there as such, just a normal or one of the traditional inherent risk factors. And that is then across the board. Right, so that is your 1160. I want to say almost no funnies, but of course it's not that there's no funnies. We've got that inherent risk factor and we still go through the process for each of these items. Good. Let's move on in our audit process then. And in our audit process, we have now done the risk assessment, completed the risk assessment process and procedures, done the risk assessment, know where our risks are, and of course now we want to go and respond to those risks. We start then off with the audit plan and strategy. And what is new, what is different in the group audit plan and strategy? So we will determine at which component the audit work will be performed or determined. We will document the group audit considerations, the group audit procedures, normal audit procedures, if I can put it that way, and audit considerations. And then there's also the conclusion that has some changes for the group, right? I've just included the slide again to show you, although I've used the example and mentioned the example so many times, you can probably already tell me all the examples, but in case you want to see it again, goodwill, consolidation balance only, group auditor performing the work. Revenue, not a consolidation balance. We've got similar activities and common control will be done centrally with the component auditor. Investment property, only the component auditors, and PPE, then only the group auditor doing it centrally. Right. So let's go and have a look at the 1220 before we move on to 1220G. Let's go and have a look at 1220. Right, so 1220 is the audit plan and strategy, and we're going to just see how this is different then for the group, for the accounts. So property, plant and equipment, we had the risk recorded, as you'll know. We therefore have AVA, we did the stand back. There was no stand back. We were asked then to determine the components at which further audit work will be performed, so the individual components, and that's what we go to 1220G for. So we're going to go to 1220G next. The responses in terms of group auditor responses, I can't tick the stuff here myself. I've got to go to 1220G and it will pull through from there. The group audit procedures will also pull through based on the consideration. So what you can see here, for example, is the use of component auditors is not part of the procedures that we will be performing. Why? Because PPE is done by the group auditor only, so there's no involvement by the component auditors. And the procedures for the group audit process is activated because our risk has identified the consolidation process being one of the issues here, one of the risks. It will also be activated, you'll see, for goodwill, because we say it's a consolidation balance. Then in terms of the audit considerations, I haven't picked any or ticked any of those. And the audit procedures then only has the required because, well, we haven't recorded or required any additional ones. Okay, of course, accounting estimates needs to be there. Let's just say test management's estimate. Okay. What does it look like in investment property? In investment property, we say component auditors only. Okay, so we're not going to do anything on our side, are we? Of course, we are going to do something, but what is it that we're going to do? So again, we've got that risk recorded. we are going to indicate or select which components will get the work done just now. Then we have the consolidation, because in our, why did I pick consolidation now? The consolidation I picked in terms of how we're going to audit it. I think it's probably because of because of the risks that we have for the consolidation. So I then said, well, we also need to check at consolidation level then. So not just in terms of the relevant assertions, and then at component level, because we said the component auditors are going to do the work. So I'm going to use the component auditors, and therefore, even though I'm not going to have the detailed work procedures in my work program, I'm going to be prompted to go and consider the work done by the component auditors. So I can't forget to do the work by the component, to review the component auditors' work. The work procedures in the program is going to remind me. All right. Again, none of the special audit considerations selected there. In fact, I can't actually select them because, well, we're not going to do the work. The component auditor is going to do the work. So I can't say I want to use a management's expert. Goodwill is the one that's done at consolidation balance only. So for goodwill, we didn't have a risk recorded. I selected AVA for valuation and allocation. As the selected assertion, we did the stand back. We're going to do the allocation to the components. And here you can see the consolidation procedures or group audit considerations are activated because we are saying this is a consolidation balance. Right. And then lastly is the revenue. Revenue is the one where we said we almost want to say we're all going to do it. So it's centrally the group auditor as well as the component auditor. So again, the risk has been recorded. We are going to allocate it to the components. And then when we get to the considerations here, we've picked centrally with component auditors. We will be prompted in the audit procedures to consider the work performed by the component auditors. And in this case, because we've got that fraud risk response, there'll be a significant risk response as well. Good. Those being then the audit plan and strategy per each of those classes of transactions and account balances. In terms of the conclusions, in terms of the conclusions, we then also have professional skepticism considerations, and specifically also with regards to the group. So are there any conditions that may impede the exercise of professional skepticism, unconscious or conscious biases in terms of the professional skepticism? So don't forget about those. And then the conclusion asking if we are sure that we will get enough audit evidence from this group audit. So the evidence obtained from the risk assessment procedures performed, whether there's any provide an appropriate basis to determine the work by the components or the work appropriate at components, whether we recorded a risk for all instances, that one is the old one already, and if we approve the audit plan and strategy. But the question about the components and whether the work will be done appropriately is then definitely a special one for us to conclude on here. Right, so that's then the audit plan and strategy. Now, at the beginning, or well, for each of these accounts, I said that there's that link back to 1220G further audit work. So let's have a look then at what 1220G asks of us. So that's further audit work at component level. What will we find here? So for every scottability, so significant cottability, where a risk has been recorded for a specific assertion, and every material cottability, we will have to document whether further audit work is required at the component, at which level the work is required, and then also the resources that will be used. We also have the export functionality for the table, so that's quite useful. And then again, for extended users, there is a summary at the bottom. Right, so if you don't use the extended profile, you will not see the summary at the bottom because everything's already been documented. I am very fond of that summary. So let's just have a look at that then. Right, quite a number of things for us to consider. So property, plant and equipment, we have recorded a risk. Those are the assertions from 1220G. We said that this is not only a balance through consolidation process, and we did plan to perform the risk assessment procedures further work centrally when we perform the risk assessment procedures, right? So we said centrally. Now, what needs to then be documented is to say, for the consolidation component, if you want, the component 1 and component 2, we need to say whether the group risk is associated with that component. What was our risk? Our risk was the classification of the investment property. So I guess I just said yes now to all of them, but you'll go and consider whether that risk is really applicable to all of the components. Remember that I had said that the consideration was with regards to subsidiary C. So I guess one could then also have gone and said, well, no, actually, it doesn't have anything to do with component 1. I do want to leave it with consolidation because that's where the issue is going to be. Past misstatements, are there any past misstatements? And then also just note that if I document whether there are any past misstatements here, it's actually going to come up again later when we consider the component materiality levels. So you don't then have to respond there again. So past misstatements here, any past control deficiencies to take note of, anything that will help you to determine if that component needs to be tested through further audit work. Do you need to disaggregate the component based on the size of the contribution at the component relative to that of the group, or based on the nature of that class of transaction account balance disclosure? Any other factors that you're considering, and then additional detail that you want to document. Okay, so that's all your considerations, and then ultimately to say at what level is the work going to be done. So there at consolidation, well, the consolidation for the group auditor, and then the centrally done by the group auditor, as we said. Okay, so PPE, only the group auditor is involved. I've actually gone as far as saying in component 1, no audit work is required, okay, because that's not where our risk was. For investment property on the cost model, this one here is now where the component auditor is going to do all the work. We are just going to review their work. We don't have to do any of the field work for the component, where the component auditor is going to do the work. So investment property, we've got that same risk in terms of the classification. It's not a consolidation balance, and we did not say that we are going to perform the work centrally. Again, we've got the 3 components. The risk is only associated with component 2. I said, yes, there are past misstatements, which I think I also said in the property, plant and equipment one. I'm going to disaggregate it, and there we said consolidation for the group auditor at component level for the component auditor. And in this case, I said, well, we're also going to audit the investment property at component level. They also have investment property. They'll go and audit it in any case, but of course, that's not then linked to the group risk. Then for goodwill, so that's just to confirm then, to say that we are confirming the consideration, the decision to only test at component level. For goodwill, we said it is a consolidation balance only. So we selected valuation allocation here. It's not a risk. So it says selected assertions then on the left-hand side. We indicated that, yes, it is a consolidation balance. And then therefore, the question about whether further work needs to be done is basically not relevant. It's a consolidation. It's going to be by the group auditor. And then I've just documented there's no risk recorded, so it's not relevant. I've documented no past misstatements, etc. And we are going to do this at consolidation level only. Right, last one, 4th one, revenue. Revenue, we've got the fraud risk. Cutoff is what I selected there. We have not part of the consolidation, yes, centrally, and there we've said the combination. So you can see that I've actually then indicated the combination being involved. I guess technically speaking, the group auditor is going to do the consolidation part, but then the component auditors will be involved in the other components. All right. Then the right at the bottom is where we've got our table as the summary. I see a question coming in here while we are waiting for this. So what I've done in the holding company, in this scenario, I call client, what was it, client hold code. In my scenario, the way that I set it up was to be part of component 1. So let me actually go back to 1120G just to show you. So, right, looks like the synchronization has been done. So the holding company here right at the bottom, client holdco is the parent, and that has been allocated to component 1. It's possible that you can just keep the holding company as a separate component if you want, but in my scenario, I've grouped them together with all of them being manufacturing together. Subsea was not manufacturing, and therefore, because it had different activities, I grouped it into its separate component. Right. Yeah, but that tells me you guys are thinking. You are definitely keeping track and checking what's happening and making sure that you understand and that you follow through. So thank you for those questions. I do see another question. Looks like a lengthier question. Let me just quickly have a look at that one as well. This is an interesting question. So every engagement file must have the documentation necessary to show compliance with the auditing standards, the ISA. So the question here is, if you test controls and do the detailed planning and the risk assessment on the group or the consolidation level as a group auditor, is it then perhaps not necessary to record these risks in the individual entities, caseware audit files? Can you somehow refer to the holding company risks in the individual entities? I'm of the opinion that you probably won't be able to do that. And the reason is that if you sign off, this is now my assumption, is if you sign off a separate audit opinion on the individual company, the individual entity, then you need to do planning to make sure to document your understanding of that individual entity by itself. You'll do your materiality calculation, all of those things for that individual entity. Yes, of course, it's possible that if you do your individual entities, let's say control testing or selection of a sample to test a specific balance or anything, that you're probably going to audit more in that entity than you would have for group purposes. So it's possible that your group purposes are going to say, well, with your specific materiality, you're going to have to select, I don't know, let's say 12 items. But in your group entity, you've already selected 20 items. So then you're not going to select 12 items again. You're just going to use the results from that 20 items, is what I would rather do. But I would not say that your risks are always going to be the same at console level than at group level, at company level. So company level risks can be different because your consolidation can have different level, risks. If you think about the example that I gave now about the investment property in subsidiary C being misclassified as investment property in the group financials when it should be in property, plant and equipment property, buildings in the group financials, that of course is a risk that is not relevant to the individual company's financial statements. So you will have to consider those risks separately between the group and the company. Whether you should have to do additional testing between the different two is not necessarily the case, as long as your engagement files meet the requirements of ISO 230, which is audit documentation. And that says that every engagement file must show what work was done and must have the details. So for example, if I selected a sample, I can't just say I tested 20 items in the engagement file, separate engagement file, therefore I know it's been done and it's good enough and whatnot in the group file. I need to identify, I can't remember the exact term from the standard now off the top of my head, but it's something in terms of a unique identifying characteristic. So the invoice number, or the debtor name or something like that, that you should be able to document what was done, who performed it, who reviewed it. All of those elements needs to be on a working paper. All right. Okay, here's a very interesting question. Is it mandatory to create a separate file for the group or the consolidation audit, or can the consolidation be done in the holding company entity file? The holding company is audited separately before being consolidated with the different components. So the challenge here is that you need to do work on both the holding company and the group, and you will need more space than what is available in an individual file to be able to document both of them. So ISO 600 does not say you must have two separate files, but practically the way the methodology works, you are going to need two files, except if you have an audit single legal entity. But if you have an audit of multiple entities that form a group audit multiple entities, then you are going to need a separate file for the consideration of the group level. Okay. Let me just quickly see that I've addressed all the questions. I think I've answered that one, Yeah, so I think I've answered all the questions now, but I'll trust that Christian's also just going to check that I have answered all of the ones that needed to be answered. Okay, so from that then, just want to mark these ones as that they have been answered, otherwise I'm going to get confused later on again. Okay, here's an extra question. Thank you. Why will one do audit work at group level, for example, on revenue, if that section was already audited in all the component entities? I understand for balances that only appear because of the consolidation, let's say the goodwill example that I have today, but each component, the holding company and a subsidiary, will need to be audited separately. Can you not just rely on that audit work that was performed on each individual company level and not do additional extra audit work at group level? Your point is very relevant. In many cases, it will be possible to do one sample, one set of work in the group, in the individual entity, whether it's a sub or the group holding company, in that holding company, in that subsidiary file, do your sample, etc., and that's it. However, there are a lot of considerations. For example, whether the performance materiality or your clearly trivial, the amount above which misstatements need to be reported to the holding company, to the group company, or your performance materiality in your individual file, whether those are close enough to each other. So if you have a scenario, which is hopefully the case, where your performance materiality in your individual file is smaller than your group company file, and your amount above which misstatements are clearly trivial, is small enough that you will pick up any misstatements above the group, let's call it now clearly trivial, the threshold above which misstatements need to be reported to the group auditor. You'll identify all those. Then you can do your separate company audit in your subsidiary and almost want to say, filter out what needs to be reported to the group company. The challenge comes in certain cases where the group has an audit and there are lots of entities, and not every one of those entities are audited. Some of those entities are maybe just getting an independent compilation. Some of them are maybe just getting an independent review. Maybe a compilation is maybe taking it a bit far, but an independent review. So if I have that independent review now, then how am I going to, on the company, there's just an independent review done. So independent review doesn't even involve testing controls. It doesn't even involve selecting samples. It doesn't even involve doing a risk assessment. So in those cases, you're going to do your independent review, and then you're going to get your instructions from the holding company that says, or from the group auditor that says, you also need to go and perform the following. You need to go and obtain an information system description and do this and do that and do this and do this. Yes, if you then stand back and say, well, this is actually feels like I've got more work than what I signed up for. Can I not just audit all the entities in the group? By all means, that might be the way to go about it. And then say, right, we're auditing all the entities in the group. Let's get it over and done with. But it's not necessarily the case it is done in all groups. There are groups where especially divisions and things like that are not audited in detail. They're just getting independent reviews maybe before they get consolidated, and then the holding company just does the audit. And so then your selections are also smaller, etc. The same thing for a group of entities where not everybody needs an audit, and you're therefore doing independent reviews to meet the, let's call it the Companies Act requirements, but the group still gets consolidated, and therefore you need some figures to be audited. All right, so that's maybe a bit of a lengthy response, but I hope that clarifies it to say that's why all of these scenarios are there. So yes, if you've been auditing all of them, you need that extra audit file, which is something that the RBA has also issued a number of queries on in the past to say that we do the individual entities audits, but then when we get to the consolidation, we almost just reperforming the consolidation. We're not actually addressing audit risk on that consolidation. Okay, I've got another question coming in to add to the question you just dealt with. If the component is not audited, can a component auditor just do an assurance engagement other than an independent review or an audit to provide the group auditor with assurance for a specific section? Excellent question. So let's say that other component, that one component is not audited. As long as that component, let's say it's a company or whatever it is, as long as that component meets its own requirements, let's say Companies Act requirements, you don't have to audit the whole component just because the group auditor wants it. So you will then, based on, again, think about your top-down approach, you will then, based on what the group auditor has identified as possible areas or risks to focus on, the component auditor can then say, over and above what I've done to meet the Companies Act requirements or whatever I've done, okay, so there was a compilation or whatever it was, over and above that, what more do I need to do to perform the work for the group auditor? So you're actually then doing work for the group auditor under the group engagement letter, under the group engagement. So you can do your work and keep it in the same caseware file, that component work, keep it in the same caseware file if you really want to as the component engagement, or in a separate caseware file, and just basically, almost want to say, use caseware working papers just to lock down the documentation, the working papers, so that it's not flying somewhere in a server or an email or a whatnot. Just put it in the caseware file and say these ones are what actually goes with the group engagement that was done to the group auditor. I hope I've addressed that question. So the question was, if the component is not audited, can the component auditor just do an assurance engagement other than an independent review or audit? I don't think you need to do a full-on assurance engagement. You will be performing some of the procedures in line with your instructions from the group auditor to comply with the group audit under the ISA 600 audit. Right. From what I can see, it looks like I have now addressed all of the questions. Good. Right. Moving along. So we've got 40 minutes to go. I do wonder, once we've discussed this, if we shouldn't just take a quick comfort break. I don't want to lose any of you. I know it's already amazing. We've got all of you guys still attending. So let's just quickly work through this, and then I think maybe a quick comfort break may be helpful. Right. So we were busy with further audit work at the component level. We'd allocated per account what we were doing or not doing. And then we got to the, let's call it the summary slide, or the summary of this, which is available to your extended users only, or to your extended profile rather. And this then shows for component 2. Component 2 in our scenario is subsidiary C. In that case, the following will be audited: investment property at the cost model at the component level by the component auditor, revenue by the component auditor with the group auditor. So if I was the component auditor for component 2, that's what I need to do. I don't have to go and do any other sections. You can clearly see property, plant and equipment, goodwill is not included in there. For the component 1, that's now, in our case, it's now subsidiary A and B and the holding company. There we've got investment property on the cost model and the revenue. Okay, so that is then what can be communicated to the component auditors. Additional things to consider there: whether audit evidence are needed on all or a significant portion of the component financial information, the going concern at the component causes pervasive ROM relevant to the group going concern. In other words, is this individual component so important, or this issue so important, that it's going to affect the going concern at the group level? And then the level of audit work at the component level, whether that is deemed appropriate, yes or no. The entire financial information, one or more class of transactions, specific audit procedures. So coming back to that one question, it's possible just to do specific audit procedures actually. Okay. This is then where we will describe the nature, timing and extent of work performed, actually mention that component auditor, and then also to document whether they are from our firm, whether they're in our network, or none of those. Because that would then also help me to understand to what degree I need to also make sure that I understand the firm's policies and procedures in terms of quality management and ethical requirements and stuff. Okay, so that will be communicated. And again, I've got my export button to basically just export this table so that I can have the information to then go and communicate and distribute. I have another question. Let's see. If we use the component auditor to perform work on investment property, in this case, okay, because we said investment property is just by the component auditor, what are we required to put into our group audit file? You are jumping ahead, but please don't worry, keep that question, I'm going to show you. Right, good. So what I want us to then just quickly look at before I promise you that comfort break, and I also need it. So there's 2 other documents that is also included. 1222G is a document that's called use of component auditors. I want to call it like a checklist, just to say these are the things that we need to do with or for or communicate to or make sure we get from the component auditors. Let's make sure we've done that. Okay, so it's like a checklist, really helpful for you just to also use them. And then the component materiality, that's also a document for you to use to document component performance materiality. And there you can see I mentioned that where we had said whether there were misstatements in the past or not, those are also brought in for us to see, so we don't have to go and do it again. And then I can add specific materiality items if I need to. I'll document the threshold above misstatements need to be communicated to the group auditor. And that's that thing. And then to say whether we've sufficiently taken into account the effect of aggregation risk when the component performance materialities are calculated. All right, so another question. Thank you, I love this. If component auditors are audited by different teams of the same audit firm based on the firm's methodology, at group level, should the documentation of communication with component auditors be the same as if the component audit firms were external to the firm? That's an excellent question. Of course, there are no bad questions, but that's a very relevant question, and I like that you're thinking that way already. So your communication will probably be slightly different, especially if you go and work through the detail of the requirements of the communication with component auditors, because your other teams will already have gone through the training and know what the requirements are in terms of independence, in terms of confidentiality, in terms of special policies and procedures that you have about how work needs to be done. Let's take, for example, your sampling policy. Okay, your teams will know what your sampling policy is. If not, it may be necessary that you need to communicate special things to the component auditors so that you know they select big enough sample sizes, or that they select in the way that you want them to select the samples. So yes, the communication will definitely be less if you have component auditors within your firm, possibly even in the network if they also follow the same audit methodology, etc., as opposed to external ones. And maybe a bit of a silly example, but there I like to always think about the sample sizes. You know, the same way that you will go and tell another auditor that's going to attend the stock count on your behalf, and you say, I want you to please go and select how many ever, 10, 25, 30, 65, 15, whatever, and make sure that you select this and that and not this and that way and blah, blah, blah. And this is the working paper I want you to complete, etc. That kind of information you would also communicate to the component auditor, because they're now part of your team and they need to meet your firm's policies and procedures for engagements. Right. Good. Ladies and gentlemen, I need you to still hang on. We've got another 30 minutes, but I'm going to give you 5 minutes max comfort break, because I know it's getting long and we still have a lot of information to get to. And I know there are some of you that you said you were getting ahead of yourself. You're wanting to see, where does this go? How does the engagement file look different? So we're going to get to that part, but let's just quickly take a comfort break. Okay, I'm not going to put on the countdown timer now, because that's going to count down 10 minutes. So my watch says it's 11:28. 5 minutes is 11:33, and then we will continue. Ladies and gentlemen, we're just taking a quick comfort break. For those of you that needed to take the quick comfort break, there's another 2 or so minutes left of that, and then we will continue. So just stay with us. We will continue shortly. Right, ladies and gentlemen, just one more minute, then we're going to continue. Right, I hope everybody's used their comfort break productively. Now it's for the last stretch. Right. Okay, let's just see the slide. Good. Show you the right thing that I want to show you. Okay, so we have considered the audit plan and strategy. We looked at the further audit work at component level. Then quickly we looked at the component performance materiality that you'll go and calculate as necessary. Now we go to the work programs. Right. So there's a few work programs that I want to highlight to you, and to then hopefully also put that one question that we had to bed about how will the work look differently in my work programs for, like, let's say the investment property in our example. So what we will see in the work programs is that we will now have sections for use of component auditors. So to almost want to run ahead of myself, for investment property, we're going to have a section to prompt us, to guide us, to tell us what to look for, how to check, how to review the use of component auditors, the work performed by the component auditors. Then there will be a section on the consolidation process where we've identified that to be something to consider. There are additional conclusion questions, and then there's also additional points when we choose to say, when we say, oh goodness, no, I haven't got enough audit evidence, or the reality of the standard says, well, you know, it could be that you feel that the component auditor doesn't have the capacity, and that doesn't mean they can't do it. It can be that actually because of delays from the client side, now the component auditor is no longer available, and so therefore we can't rely on the component auditors to give us sufficient appropriate audit evidence. What do we do now? Well, we need to revise our audit plan, and we will then do that in literally revising the work program as well. All right, so that's also included in there. So the first thing I want us to look at then is the financial statement preparation work program. This is a work program we'll have in any case, but there is a prompt for you, a reminder basically to say, don't forget to audit the consolidation. Okay, so there's just one quick reference there, and I'll show it to you. In 1810, this is of course our general working purpose, work programs. In there, one of the questions under the financial statement preparation is a question to say, perform the procedures related to the consolidation process on 2510G. Okay, and that, guess what that work program is about? The consolidation process. So no surprise there. Okay. So again, you don't have to duplicate the effort, but we do need audit evidence that the consolidation process was appropriate, and we need sufficient appropriate audit evidence. Good. Then next up is 2510G, the actual consolidation process work program. One thing that's important, and you're going to see it when we look at the actual work program now also, is that there is a warning there. Hopefully you can't miss it. And the important point to mention or to note here is that there aren't any framework-specific audit procedures in this work program. In other words, you will not be getting the same detailed work procedures from an IFRS or IFRS for SME perspective as you would see in your property, plant and equipment work program, or in your revenue one, or whichever one is. Okay. So those are not in there yet. And they will probably only be added in a later release, so not in this release. So you need to make sure that your teams develop the appropriate procedures to include in the consolidation process work program, that they address all the requirements from the framework. If you had selected that the client has additions of subsidiaries or disposals or a change in interest, that's all part of your gathering information questions earlier on in 1050, if I remember correctly, then those procedures will also be activated here to say you must now test the additions, the disposals, and the change in interest. There was a question earlier about sub-consolidations, and then there will be procedures here to prompt you for sub-consolidation procedures. And then, of course, just the conclusion questions. So let's see, what does 2510G look like then? This is now the work program for the consolidation process. So again, you've got that warning right at the top to say procedures to address the requirements related to the consolidated financial statements, in this case for IFRS SME, as issued by the Accounting Standards Board, has not been included. So you need to review the work program and update as you deem appropriate. Right, once you're happy that you know that this is done, you won't forget about it, you can hide the warning and then update your work program and perform the procedures as normal. Maybe something just to bear in mind is that this consolidation process work program, because it is also linked to your financial statement process, it is one of your general work programs. So to show you the caseware file then, you may remember that under your work programs, you have the specific sections, the non-current assets, etc., for the property, plant and equipment, but you also have your general work programs, which is where your accounting records and your opening balances and those ones are. So your consolidation process work program and your evaluation of the component auditors work program, those two specific work programs relating to groups, you can see they've got the G's next to their numbers. They are part of the general work programs. Right, good. So let's go and have a look then at 25G, as we've mentioned. So your procedures are included there, obviously all about the consolidations. Your conclusion questions are very similar to the ones that you are used to. Communicate whether you need to communicate in deficiencies in internal control, matters significant to the financial statements within the group that may be required to be communicated, fraud risk factors, laws and regulations, related parties, you name it, all of those questions are then in there. And then your conclusion right at the bottom, as you are used to for your general work programs. The next one is then your evaluation of the component auditor's work. So you will be prompted for specific considerations in the specific classes of transactions, account balances and disclosures, but you also have this overall evaluation work program for the work performed. And you always have to use this for groups, right? So whenever you've got a group, both the audit single and the audit multiple, you have to complete 2610. Well, the same also with your 2510 for the consolidation, of course. Yeah. So the questions, again, the procedures are in here, all of those requirements for component auditors, considering whether you've communicated with them, whether they've done the right things, etc., etc. All of those included in there. And then your conclusion questions, you can see there's a lot more questions. Why? Because this is where we will say, well, you know, significant matters brought to our attention, restrictions imposed on the component auditors, and how we can actually complete the audit if we can't. You know, if there are those restrictions, how can we come about them? If we say the work performed by the component auditors are inadequate, what can we do about them? So there's just a few more considerations specific then to component auditors that we didn't have just now in the consolidation questions as well. Good. Then next up is our work programs for the specific classes of transactions, account balances and disclosures. So again, I've included the work program or the reference there for us in terms of the different sections. Let's have a look at each of those work programs then. Okay, so the first one that I've got, just because it's first on the list of sections. Sorry, I've got another question. If the component is audited by another partner in our firm, you have to complete the consideration of the component auditor? Yes. So if you have a component auditor, yes, then you need to complete 2610G. Of course, again, where there are things that are simpler, hopefully you'll have less to do, or it would be easier to answer. But yes, if you have component auditors, you need to complete 2016, even if the partner is in your firm. All right, so the work program then for property, plant and equipment, in this case we said only at group auditor level, only centrally performed. So you will be familiar already with the required procedures. They are all there. I want to say the normal procedures, so the procedures you would have seen in a standalone audit file as well. For property, plant and equipment, we are performing those. We only selected the risk for AVA, and specifically in this case, it was the classification risk, right? So that is also just as a highlight. I didn't go and hide procedures or anything here, but that you obviously will still do in your own file as you go through it. Estimates, we've activated the questions about the procedures about estimates through ticking the estimates, through selecting which response to choose in the audit plan 1220, so that's all there. And then because there is a consolidation process, we said because of the consolidation process there may be this problem, so we've got the consolidation process selected in the planning. So now I'm prompted to say also consider if the consolidation process was properly followed for property, plant and equipment. We don't have a list of procedures again. The point is here, the prompt that you get says a risk of material misstatement at assertion level relates to the consolidation process was identified for the section. Add audit procedures to obtain sufficient and appropriate audit evidence to address that risk. Right, so you are then prompted there to include additional procedures for your classification risk that we've recorded. The conclusion questions, we've got all those questions again. There's no questions about component auditors because we didn't use component auditors, right? And then we will conclude on that work program. This is property, plant and equipment, where we are performing all the procedures by the group auditor centrally only. Then the investment property, that's the question we had earlier on. What will my file look like? What are we required to put into our engagement file for, in this scenario, then investment property being audited by the component auditor only? I will still have a work program. The work program will show the procedures activated for valuation and allocation. Why? Because we have a risk recorded for valuation and allocation. Oh, sorry, AVA, but it was because of classification. So I'll follow the same steps and the same process to say, of the procedures that are activated here, which of them are actually relevant to the risk that I've identified? And chances are you're going to find a lot of them are not going to be relevant to your classification assertion risk. So you can then hide all the ones that are not relevant. There's some considerations about the impairment, the estimates. I hadn't activated or selected the appropriate estimates one year. Well, I mean, whether there's need for additional considerations, but because, and then journal entries, because we are using component auditors, I actually have a long list of things, not so long, but the list of things I need to consider for the work performed by the component auditors. So here then, Donna, your question, evaluate the appropriateness of the design of further audit procedures by the component auditor. So you're going to review the planned procedures. So ask them to tell you what they plan to perform, and then obviously review it once it's been done. I really do hope that we're not going to get to the position where we had in the past, where everything gets done, the whole component is audited, and then right at the end, the engagement partner reviews that file quickly. Okay, because it could get to a point where you're saying, but actually what you had done as further audit procedures was not appropriate for our group audit. All right, so I do think it's just a little bit, almost want to call it proactive communication. I'm not sure if that's the right wording. So hear it in the right spirit, if you know, to make sure that you guys are communicating between the group auditor and the component auditor of what the component auditor is going to do in any case on his or her own file, and what the group auditor requires. Evaluate the performance then. So firstly, it was the design. Secondly, the performance of the procedures. When a component auditor used an auditor's expert, discuss the following with the component auditor, and then consider whether communication from the component auditor includes their overall findings, whether that provides what we need. Okay, so there are the prompts that you need in order to review the work done by the component auditor. Now, I guess the question is, right, so I can put a memo there to say, what did I review? But your memo needs to be in sufficient detail so that, remember, this is a standalone file. This is a file one audit opinion. So if a monitoring person comes and reviews your file, or if the audit regulator comes and reviews your file, then what would that person, as the experienced auditor, want to or have to see in your engagement file to be able to see if you complied with the auditing standards? So that there again is where one would have to consider the quality management policies and procedures, what would work best for your scenario, things like that. Is it always going to be practical to copy working papers into your engagement file? Are you always going to want to do that? Are you going to get maybe the pack? Are you going to, yeah, so there you need to consider what is necessary in your engagement file. From an auditing standard perspective, what you need in your file is you need documentation to meet the requirements of ISO 230, which is the documentation requirement, that says you need to show which items were tested, the nature, the timing, and the extent of procedures. Who performed the procedure? So that also linked to another question earlier about component auditors and things. So who performed the procedure? Was it the component auditor's trainee that performed it, or was it your own engagement team member, your firm's trainee? Who performed it? Who reviewed it? When was it performed? When was it reviewed? All of those elements around working papers still needs to be considered in saying, will a reasonable auditor be able to conclude the same conclusion as I did, having reviewed the working papers? All right. And then because we had also identified the consolidation process, because of the classification risk that I raised, we again have a prompt to add procedures because of the consolidation process. Then some new questions here. Remember, this is where we use the component auditor. So I've got a question to say, have your procedures, your results indicated any matters that may be significant to the financial statements of the entities or the business units within the group that may be required to be audited by statute or regulation? So have you become aware of anything like that? Again, the points that we had earlier on, that the work performed by the component auditor is inadequate, and then if you need to any of these items to revise your audit plan, and then there it would simply be by actually just switching on the general procedures, the laws and regulations, accounting estimates, any of those that you need to. Okay, so so that you've got the prompts there to actually add additional procedures. In this case, because we've already activated consolidation procedures and we've already activated component auditors, you don't have those points up at the top as part of your options to revise your audit plan. But in a scenario where we didn't have the consolidation process activated, you could then activate the consolidation process. In a scenario where we didn't use component auditors, like your PPE one earlier, you could then activate the use of component auditors. All right. Investment property then being the one where we are using the component auditors only. Goodwill. Goodwill is just that consolidation balance. So again, group auditor only. And because there is this consolidation involvement, we have the same warning that we had before. So because we said this balance only actually comes about as a result of the consolidation, we are warned here to say the steps in this work program has not been updated, in this case not included, but updated for the consolidation process relating to the framework. So we've got our risk there. We said, well, sorry, not a risk, it was the assertion that was selected, AVA. We've got the procedures included in there, and we've got the consolidation. And if I wanted to need to revise the audit plan, there I could select the procedures. In this case, we only have the required procedures, and I could then include the additional procedures. Right, so now consideration of component auditors. just the procedures themselves. Last section being our revenue. In revenue, we had the fraud risk. We had said we are going to perform work at group level, group auditor level, and we are going to perform work at component auditors level. We'll let the component auditors perform work. So we've got procedures and we have component auditor consideration. So there is then basically a combination. So we'll have our own working papers and we will have documented what did the component auditors do, what did we review, how did we review, etc. And again, conclusions for them. Right, then after we've done the work programs, then the finalization, just for you to take quick note of. The partner sign-off has been updated with points added for the ISO 600 requirements. The document 0250 consideration of assurance reports. This really is one of the favorite documents for me in the Probe methodology. Questions were added again for consideration for the group audit opinion, ISO 600. Report to management and those charged with governance has relevant points in terms of what needs to be communicated for the group. And then your letter of representation in the scenario of group audit multiple refers to consolidated financial statements, because that is obviously what it is. Okay. In today's session, we spent, well, I want to say 98% of the time talking about group audit multiple. To a large degree, because that's what I expect a lot of you to come across. And then at the same time also, because that is where a few things are different, because you will have the group only file and you will have the holding company file. And so you don't need to duplicate everything in the group audit file. However, the group audit single file also has a few changes, but I wanted to just quickly highlight, I'd say, two things. First of all, the fact that you'll have to document or respond to all the questions in 1050, gathering information, because it's not just one company. And then also for 1051, types and volumes of transactions, there you will be documenting all the transactions and balances, because it's just one entity. Right. And then here and there are a few other funny ones, like with if you have a component auditor, you won't be able to select that you're also going to be testing the laws and regulations, or also going to be testing the management expert or things like that when you are deciding on your audit plan and strategy, just because you only have the single entity. So those are, there are a few of those small items, but I must want to say the more funny is the fact where there are more changes, where there are more items to look out for or to note, is definitely in the group audit multiple. However, if you want more information, please just go and have a look at the release notes or the what's news. There's a lot of information there. They are very thick and fat documents, but they are very, very helpful. So those are on the community, success community as well, for you to then scroll through there and have a look. Okay. Yes, I think that then brings us basically 5 minutes ahead of time to the end of the session for us. I'm going to just, still be around for some questions. If anybody has any questions, you are welcome to still submit any additional questions, send any additional questions. What I want to also just remind you of, or let you know of, is that we are busy planning and working on the 2025 Get Ahead. So this is just our new branding for the Get Ahead series for 2025. And just to be on the lookout for the communication about the 2025 Get Ahead series. I'm also just going to, I think the video is about a minute long. So while some of you are maybe still documenting your questions or typing in any questions that you may still have, just have a look at what we have coming up for Get Ahead 2025, which is of course our training series that we run at the start of the year.